following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Good morning, everybody. Welcome to Ninjatrader Live. My name is Jim Cagnina. It is Friday. Happy Friday, April 12th, 2024. Joining me live from Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Hey, Jim. Good morning. How you doing?
Pretty good. A little tongue-tied so far this morning, but I'm going to attribute that to it being a Friday.
Wouldn't that be fun if we had a job where we could drive? I could drive you somewhere. That'd be great.
Yeah. I guess. I don't know. I'm my long road trip days are behind me. I know you have one of your offspring is in Boston. That's what, a 9-hour car ride to go and back. You get there?
It feels like it sometimes. It's not that bad. It's about 4 hours.
Oh, okay. I misunderstood. That's not bad at all. No.
Yeah. No, that's in fact, I'll be visiting him soon and I'll be taking the train. I love taking the train from New York to, let's say, Boston or DC. It's always fun.
And where do you board the train? By you, or do you have to go into Manhattan?
I have to go into Manhattan. I have to go to Penn Station, and then from Penn Station, like I said, you can go up north to Boston. You can go south to DC. They rolled out a train a few years ago, maybe 20 years ago, called the Acela Express. It's a really nice train.
Wow.
Yeah.
I like the name.
Yeah, it's great.
All right. Well, let's get into it. I mean, we have another extraordinary day brewing here, and many of the CME Group futures markets. Let's start with where we usually start, with a daily E-mini S&P chart. We have a bearish engulfing candle time developing as we speak.
Yeah, it's still trapped within your hamburger buns, though. It's really interesting. You found that level you've identified that level of support there. And today, so far, it's respecting it. Now, we haven't had the regular trading hours open. We haven't really been informed what the institutions think, but hopefully this will hold. You have that upward sloping 50-day moving average right below it. So that would be my next target if it fails. And, this market's a little spooked on some news that came out. So we'll get some more information.
Yeah, and I wanted to show this chart before we talked about the economic releases, just to get it in perspective. So let's talk about those economic releases now, because we had one this morning that came out that was planned news by the Bureau of Labor Statistics called Import and Export Prices, which I thought was interesting.
Yeah, so import and export prices were a little higher. I think month over month numbers, at least, the import prices were a little higher than forecast and a little higher than the previous report, which was for 2 months ago. 0.4% versus 0.3%, not a huge deal. Export prices were kind of in line with forecast, but they were way down. They were way down month over month from last month. So maybe it's kind of back in line. With what it was trending at.
And I'm gonna go out on a limb, and I look at the actual 0.4 month over month for import prices, 0.3 prior, 0.3 consensus, and on a casual glance you're gonna be like, oh, this is inflationary. Import prices are increasing. This is inflationary. But when I read the report, it was heavily weighted toward fuel imports, as opposed to anything else. So maybe, we know fuel is volatile. We know it's, it's going to move around a little bit. So maybe a little less dramatic. We did have a pretty significant sell-off though, Tom, when we get to the intraday chart that coincidentally timed with this 8:30 release. And as we know, there's a lot of other stuff going on.
Right. Some of those other things, of course, consumer sentiment comes from the University of Michigan. That will be out at 10 o'clock, and that could be a little bit of a bump or a drag, if you will, whichever way it's going. Although we'll see how it fits in the greater scheme of schemes of things today. We have the 1 o'clock Baker Hughes rig count. That's a trendy number, meaning you want to look at the trend, not necessarily the print. We're not looking for beating of a forecast, because I don't think we do have forecasts. It's just a number that's reported every week. And then we have Raphael Bostic speaking at 2:30, and Mayor Daley speaking. Mayor Daley, sorry, that's my Chicago days. Mary Daley, Mary Daley, for the San Francisco Fed Bank president. She's speaking at 3:30. So those could give us some information at the end of the day. I think today will be really interesting to see what happens as we close out the week.
Yeah, for sure. Now, I mean, there's so much going on. Now, we had a couple of big banks report earnings today. Three of them actually: Wells Fargo, J.P. Morgan, and BlackRock, starting this whole earning season kickoff, I guess.
Right. Yeah, we did have, and we did have some more too. I think Citibank reported, they reported, and they had a beat on the estimates by quite a bit. 20% beat. 123 was estimated, 158 was what it came in at, and the revenue was up too. So, even though we have these companies reporting and they have earnings beats and revenue beats, the stock could go down if their projections, it's their forward-looking report that can move the market, that can move those markets. So, yeah, today I think there were a total of 6 financial companies reporting, and it's really the kickoff to earnings season today.
Yeah, I mean, both Wells Fargo and JP Morgan's data looks pretty good, except they both missed on what's called the net interest margin, which I'll read you the definition, reveals the amount of money that a bank is earning on interest or loans compared to the amount it's paying out on interest on deposits. And, it's a measure of bank profitability and growth. But if you think about it, a lot of the loans that are resting on these books, were issued in the zero interest rate environment right now. And now they're paying up to compete for deposits. So I don't know how important that particular component is, but it did raise some eyebrows.
Yeah, interesting. And with it, the interest rates rising, they've risen in the past couple of years. The loans, maybe the loan market has slowed down, right? So they're not getting. Certainly they're loaning money, but they're not getting it as much. People are probably a little reticent to take out mortgages, take out other loans, business loans, when the rates are at 5 to 7% versus 1 to 3 before.
Yeah, that's the Cagnina household. I'm snug as a bug in a rug right now. Anyway, there's some other data we'll talk about a little bit later, but that's kind of what it is. So let's go back and take a look at these charts here. We got that really nice so far support brewing right now on the EMA/S&P, as Tom described, around 51.95. Let's kind of move around the cabin a little bit. The micro NASDAQ also having that same negative reaction here as well. We're back into the hamburger bun, right? We had like some of the onions and pickles fell out of the top of the bun yesterday, but we're right back into it. So I didn't change it, Tom. I just left it there.
Yeah, I think that's fine. It could be one of those things where bump above and bump back in, and we trade sideways for a while. I would leave them there as well. Looking the same, just a little bit more elevated due to yesterday's advancement versus the S&P. S&P didn't advance as much. This is kind of wait and see. You could call this a dark cloud cover as well. We talk about piercing lines. Dark cloud cover is basically piercing line to the downside. So you see a big up move yesterday and then a reversal kind of at the same level. It opens where it closed yesterday. That's kind of normal, but it just has this big red body going through halfway and even more. So it's kind of dark cloud cover is that piercing line on the top side, bearish, but it's not quite an equal and opposite, that we talked about with Dan Graham's.
So I'm going to estimate it. I'm going to draw a blue line. Again, it's kind of hard to see with the green candle, but that's about the midpoint that Tom's talking about. We're well below that, Tom.
Yeah, and that's a bearish indication.
Yeah. So, all right, that's not looking that good, folks, from a bullish point of view. But there's a lot of room here, Tom, in the hamburger bun. This is a big consolidation range. These are big, nasty candles, with the exception of the candle on the 5th and the candle on the 8th. But it's we're on the move there. Let's keep moving. Let's go over to Russell 2000. They're also down 14 handles.
Right. So the Russell I like to look at in percentage terms. It's actually doing the best out of the 4 stock index futures. It's not down. It's down the least in terms of percentage terms. So like the other stock index futures, it had just popped up above a supportive moving average. In this case, the 50. The others, I think, were more like the 20 moving average, acting as the level we want to get back to. Here we got back to that level yesterday, and today's news just knocked this back down. But interesting, you've identified that rectangle of support as well. So even though the charts look different, they're kind of behaving the same way. We just got our head above water on this moving average. Oh, well, no, wait, we're going to turn around. We're going to find the next level of support, and that's what they've done.
Yeah, so this is a benchmark candle from the 9th, right? It's the biggest candle on the board right now, and it was negative. Yesterday we had a little bit of a fight back with PPI coming in maybe a little better. And now today, this candle time is an equal and opposite candle. In other words, the size of the body of the candle so far is the exact same size as the body of the candle the previous day. And this tells me that buyers just got exhausted. Buyers tried hard, they got exhausted, and they couldn't do it anymore. Right now, this, in my mind, this is a bearish kind of pattern.
I agree. I think that equal and opposite, it's all about where you started and where you're turning around. In this case, you started bullish with yesterday's move, and now you've turned around. Yeah, it's definitely looking bearish today.
Right, and the piercing line, as we just talked about, would have been way up here with a previous level of support. Approximately 2075. We're nowhere close to that.
No.
All right, Dow Jones down whopping 307 points. Trend line, my trend line's messy. I'm going to move it. Not Lionel Messi, but what is that? Why can't I move my? Sorry, that was bad, Tom.
That was. I
I
know
was
you're more into
listening to
soccer. Yeah.
I was listening to Chance the Rapper on the exercise bike this morning. He references Lionel Messi.
Okay, yeah.
Don't ask me why I'm listening to Chance the Rapper, but I'm from Chicago. He's from Chicago. I feel like I should be a little bit, loyal.
Yeah, there you go. Trend, this trend has just been down, right?
Yeah.
The Dow just looks like the weakest of all 4, which is interesting because of the interest rate situation. I think this is more of a factor of Boeing, maybe, or one component of the Dow dragging this down. But Dow 30 stocks, you have one stock that has a good day or a bad day, and it can really move that market. Today is just news in general, but it just doesn't get a bid.
Yeah, Boeing's having trouble. Although maybe there's going to be a new CEO. I think there's an interim CEO now, if I'm not mistaken, and maybe there's a new one, but I don't think so. So once that happens, this should kind of help that stock a little bit. But right now, I hear you. I agree with that. Trend channel down. I don't know. This almost looks like chopsticks, but it's a trend channel.
Right. Yeah. I mean, I'm not looking for places to buy on the Dow.
No. Let's move over to gold. Gold is on fire, Tom. I mean, we're talking on fire. Another really lot $40 move up, Tom. And what I did, I added an extension, a fib extension. I started it all the way back here. Remember, there's 3 points to an extension. February 13th up to that peak high, March 7th. and then down to this low, which wasn't much more of a low, approximately 2150. So that extension appears and it gives us potential targets on the upside. And we exhausted the 100% target several days ago, right? A long time ago. But now we have 161.8% extension. That's a fib number. Like it or not, it's a fib number. And that's my next target up, Tom. I might eat my words about this 3,000 by the end of the year.
Yeah, right. We were saying before the show that could happen at the end of the week or the end of the month. Just joking, but you never know. And this is a gap open, right? So market closed below 2,400 yesterday. And when it opened, well, let's see. This is where we have to think about it. This is the difference between settlement and close. If I look at my intraday chart, it looks like it just kind of continued its path. It got a little bit of a pop after 4 o'clock yesterday, right?
Yep.
So kind of people are shutting their screens off because stock market's closed, not gold. Gold kept going. And that gap you see, that gap open is from the settlement, which happens earlier in the session. So this really just kept marching. And then it continued into the next session. So that's what today's candle is. Big bullish candle today. I don't know how you can say I want to go short here. As we've said, the top might not be in. Why would you think that the top is in here? So I'm not looking for places to sell. I'm looking for places to buy.
Yeah, and we've been bullish for several days now. I mean, this is, our forecasts aren't always good, but sometimes they are. In this case, I think they are. I think this is pretty positive. I think you mentioned, I think we were talking about China's central banks also starting to get involved in buying more and more gold.
What I love about your chart, Jim, is you have circled a target wick. And it's so funny because it's at the beginning of this recent trend, right? I mean, it is what it is. But at some point, that was a level that the market was trying to get over, and it's looks so far away now. We're above 2,400, right? 2,400. It just seems like gold is taking shorter time to get to the next 100 level price, right? Or 200 level, right? So 2,600 might be the next level, and maybe it won't spend a lot of time there at all. Who knows?
Yeah, and also I think there's a little bit of risk off going on right now. This whole thing with Iran and the Middle East and Israel, it's almost gotten to the point it's beyond saber rattling now, and there's maybe an imminent attack or not. And I think in some of these markets, including the stock index futures, as well as gold, I think there's this risk off kind of behavior that's kind of fueling the fire to the already questionable inflation situation.
Yeah, yeah. And who was it earlier this week? Maybe it was Blue, but Mike pointed this out. Gold doesn't produce interest, right? So when you're really, really moving to gold, that says a lot because you're not getting a return just holding it, right? Your return is the hope that the value goes up, but you're not getting paid for holding it unless you sell it after it goes up, if it goes up. So as opposed to putting it in treasuries, right? Something that generates interest.
Yeah, capital gains, store of wealth, those are the two components. And after that, who knows? But
right.
Again, a little bit of risk off going on here. And we're going to see it in the bond chart in a minute. But keep in mind too, on a lot, my feeling today is there is going to be risk off going into the weekend. Folks don't want to hold positions over the weekend, given some of this really negative geopolitical noise it's not even noise anymore. So my guess is Friday, end of the weekend. I'm not hoping for much of a recovery. We'll see what the intraday brings us, but I think these trends are going to continue.
Oh, completely agree. Completely agree. By the way, we're going to do something a little different this morning because I think there's a great question from Dan. So maybe we can address that because it's something that could be useful now before the open, which is Dan says, hello, good morning. I'm a beginner. I like to ask where you get your news for the markets. That's a great question, Jim.
So yeah, that's a good question. I'm gonna go ahead and just pull up a website really quickly and just drag it into my screen. Couple sources, right? So for me, so here's one of them, right? One of them is this is kind of real time. It's called financialjuice.com. It basically scrapes scrapes Twitter and as well as other sources of economic data and provides a pretty nice kind of running piece of information. It's free. I have Hello Jim Cags. You could subscribe to the premium if you want. I just have the free one. And that's kind of rolling on an ongoing basis, real time news, if you will. The other, me personally, my early morning routine is and it's been my routine forever, right? I'll listen to the Wall Street Journal, right? So I have a subscription, and I put my Beat by Dr. Dre headset on, and I'll either walk the dog, walk around the neighborhood, ride the exercise bike, right? And that gives you kind of a global macro position on the big topics. Then I'll read Reuters, right? Then I'll go and read Reuters. I'll look at Zero Hedge. That's for doom and gloom, but you should look at Zero Hedge and some of those websites as well going in. And then finally, now, fortunately for me and Tom, we prepare for what the economic releases are going to be. We use econoday.com, I do anyway, Oconoday, ODAY, and it shows you what the consensus is of some of these reports. So we know what reports are coming out, planned news, and we know what the consensus is. And then when the data hits the street, we could interpret it and look at most of the reports are at either the Bureau of Labor Statistics or the Bureau of Labor, the Labor Department, or the Census Bureau. That's my personal routine. And Tom, I'm not sure what yours is.
So it's pretty close to what I do. I don't have my wife has the Wall Street Journal subscription, but she just gets the weekend paper because it doesn't come early enough for her, leaving for work. So I don't do the Wall Street Journal. What I do is I try to have Bloomberg News on TV. Having worked there, I know some of the people over there, and so I like seeing them. And I just think it's a little more news or business focused. And then I also look at two other websites. The CME has a pretty good economic report section. The reason why I look at it is it gives you more than just a week of look ahead. So we do a little bit of writing as well as our videos as live streams. So I use it for helping write some of those blogs. Also, Mike Burke has turned me on to Forex Factory. I really like that because in addition to the what's coming out, it also puts the expectations and the previous data there. So in one look, I can see, okay, today these reports are coming out. Here's what's expected. But I do subscribe to Financial Juice. I do have the business or the paid version of it, and I like it. You have a squawk there. If you're not familiar, on trading desks, they would have somebody who would just read headlines or read important news that came out, or whatever it was. It would just broadcast over your speaker on your desk, so that you were informed. You don't have to look for the news. So it's kind of pushing the news to you. You don't have control over what's said, but it's pretty much what you might be interested in. So I agree with Jim. I'd look at forexfactory.com, look at Bloomberg News on TV. That's about it. And I know, Jim, you watch Bloomberg News time to time.
I watch Bloomberg surveillance in the morning. I'm kind of sad that Tom Keene is kind of slowly retiring. He's not on there anymore. But Farrow,
And
Lisa Bramowitz, and well, they have a new girl too. I think it's Anne Marie is her name. Which she's very, very smart, and they actually ask the questions that are the questions that I want to know the answers to. So, and I think you could find that free, really, if you have a streaming service or you have just a regular cable TV. Bloomberg surveillance is something that I look at in the morning.
Good question, Dan. Thanks.
Yeah, appreciate you, man. Who's the first to chime in, Tom?
So we have two first to chime in today. Of course, we have two areas of chat. Raleigh is the first one to chime in, I would think, on the Ninjatrader side. And then Patricia Meyer, she's the first one to sign in or to shout out, chime in the YouTube chat. So thanks to both of you. You get a special shout out for being the first ones.
Awesome. Thanks for being here, guys. Greatly appreciate you participating in the community. It's been a great community so far. We started this a couple of years ago, and we're moving forward. We're expanding our offerings. We're doing a lot of fun stuff. We have another fun contest coming up. We had the last guest to close contest, which was pretty cool. We have another one coming up that Mike Burke will disclose when he's been working hard on it. So we'll get the winners. Will get some Ninjatrader swag, Tom.
Did you say winners?
Well, on all the contests
Oh,
going
okay.
forward.
Okay. All right. Okay.
I mean, you only have one winner in a contest, right?
Right. What is second place is first loser? Second winner is first loser.
Yeah.
What do they say? Yeah. Okay.
Yeah, remember Ricky Bobby? If he didn't come in first, he came in last.
That's right.
It's not true, folks. Anyway, we're going to have a lot more fun going forward as well. And we have a whole new stable of guests coming on too on some of the shows, which is going to be fun.
Yep. Yep.
Treasury, we got a couple seconds left. Treasury bonds, we're going to hold that discussion for after the break. As you can see, we have a bullish engulfing candle form, and I have some opinions on that. But I also want to talk about the 30-year bond auction, which happened yesterday. Had some interesting results that I wanted to share with that longer-term Treasury offering to help fund the U.S. government.
Hey, can we take a quick look at crude? I think we've got a couple seconds. We can take a look at crude. So crude's up 2.5% or more based on this news. And, the question is, could it break out of this area that we've seen as consolidation? There's a pretty strong case for that.
All right. And there's more to talk about in crude as well. So let's take a really quick break. We'll get right back to it.
Yep.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
I wouldn't say disaster. All right, we are back. Let's focus on crude oil right now. We'll go to bonds, then we'll get to those 10-minute charts in a second. So like Tom said, we're driving up to the top of this consolidation range, right? And I think crude oil is probably more in focus with this conflict, that escalating conflict in the Middle East, right?
Yeah, exactly. We had that news overnight. Going into the morning, it seems like the news keeps getting more and more specific, and not in a good way, right? So crude being, Middle East major export, we might see some disruption of supply if these news reports, come to fruition.
Yeah, and there's a really great report, Tom, that was released yesterday by the International Energy Agency. That's a thing, right? I want a business card that says something on that like that. It's pretty cool. I work for the agency. But anyway, the International Energy Agency issued their oil market report, came out yesterday, hit the street. They have a lot of good data and takes a global point of view. As a matter of fact, if Mission Control could cut and paste that link into the chats, it's worth a read. There's a summary, and then there's the long version of the report too. But they try to forecast world oil demand as an example. They have executive summary right there. I'll just go through it really quickly. World oil demand growth continues to lose momentum, with the first quarter growth of 1.6 million barrels per day, and they had to lower their forecast by 120,000 barrels per day. So that's kind of reflective of maybe recessionary pressures, Tom.
Yeah, I would think so. When you are in a thriving economy, you need energy to power that engine. And so if world oil demand is slowing, if the growth is slowing, then it's just suggesting that maybe we're not growing, the economy isn't growing as fast as it was before. Now, does it mean it's going to shrink? Does it mean recession? I don't know. That would have to be not just the growth, that growth would have to go negative, right? Just the rate at which it's growing is slowing down. So maybe it's a slow to, what is it? Not a depression, is it recession? Is it recessionary? I don't know. But maybe it just isn't growing as much. We've heard China 5% GDP, revising down to somewhere in the fours. Like, okay, it's still increasing. So, it just might mean we're not growing as fast as we think.
Yeah, no, you're right on point there, Tom. And just kind of going forward, they're saying, the global output is forecast to rise by less than 1 million barrels a day to 102.9 million barrels a day, which is kind of small. But they're saying non-OPEC production should increase by 1.6 million barrels per day, and then the opposite is going to happen with OPEC, where with the voluntary cuts, supply could fall a little less than 1 million barrels a day. So, they're looking out and saying that, non-OPEC plus is going to fill the deficit.
Right. And it's that idea that, having a group that is acting from a price point of view rather than the supply and demand point of view. The countries that aren't bound to those cuts, they're going to take advantage of these prices of oil at 90, at 85, whatever it is. Oil's prices are increasing. Why wouldn't I want to increase my production? OPEC is kind of halting that with their countries, right? You gotta cut, keep the price up. It's an interesting dynamic for sure.
Yeah. And then the last tidbit that I thought was interesting was that global observed inventories. They use the word observed, right? So there's unobserved inventories apparently, but the observed inventories rose 43.3 million barrels in February to a 7-month, they use the word apex high, with oil on water at its highest level in 15 months, meaning oil that's already in a tanker somewhere floating around.
Wow.
So anyway, bullish here, man. I'm not looking to get short crude oil unless something drastic happens today.
Yeah.
Real quickly, we don't spend a lot of time on the bonds and notes, but this is the Treasury bond market. This is a good market to consider trading if you're interested in trading interest rates. It has nice average true range days as well, and we have what's called a bullish engulfing candle here, Tom, after this really kind of dramatic sell-off.
Yeah, and I like this higher high, higher low, like you said, bullish engulfing, which means there was somewhat of a continuation from the close lower, but we didn't stay down there very long. Not really much of a wick on the bottom. So buyers came in pushing this market up. You've got a little bit of a resistance area maybe at that moving average that's coming on up, that 8-period moving average, but still, the turnaround has to start somewhere, and this is as good a place as any, but we're still in a downtrend. We're still looking lower on bonds. So maybe a glimmer of hope for the bond bulls. Your RSI ticking up. I can't see what that value is, but
36 and a half, 37.
Right. So it didn't even get oversold. Now it's turning up with price. I think this is positive start maybe, but still a lot to overcome.
I'm going to enter this chart into evidence, Tom.
There you go.
I'm entering into evidence. This is definitely, risk off movement, right? A bearish market. No reason to consider getting one of these engulfing candles here, but that's what I'm going to attribute it to, and we'll let the jury decide. All right, let's get to some 10-minute charts here, Tom.
Yeah, for sure.
We'll go to the E-mini S&P first. I mean, we're down a whopping 31 again. A lot of volatility here. I don't have the VIX with me. Mike is gonna slap me on the knuckles with the ruler because I don't have the VIX up, the VIX up. But let's just go to that 8:30 economic release. This is when the sell-off started, which surprised me, right? Let's go to the 8:30. This is it. This is the 8:30 to 8:40 candle, right where my crosshairs is. We were pivot was holding, Tom. The economic release came, and we had a really big sell-off, and it surprised me because I didn't think the import-export numbers were that notorious.
Yeah, no, I wouldn't have thought either, especially when they really didn't change didn't move the needle that much. There wasn't a lot of change off of forecast or from previous months, except for the one that one number. But this could be coincident. I think this could be coincident with the news about Iran.
That could be too, but it's just kind of weird that it's right for sure. Those are two headwinds facing this market. But the timing of that sell-off was interesting to me as well. It almost seems like sometimes we have two opens. We have the real open, right, when the New York Stock Exchange opens up, and then we have that when economic releases show up every once in a while, an hour earlier. You got that open. So I don't know.
Well, we are open now, right? We've been open for almost 5 minutes, and buyers seem to be coming in. We've got about almost 400,000 contracts traded on the E-mini S&P contract. So it's a little bit healthier volume, which I think, will continue today. Looking at the cumulative delta, this is kind of, it pushed the buyers to the plus side, right? It pushed that number to the plus side and kind of trading in line with price. So not surprising. We're coming in here off of that. What was that? That S1 level at 92. We didn't quite get there on the low, but looking like institutions are liking, pushing it back up.
Yeah, no, I'm going to do an outside fib right now, Tom. I'm going to throw that in there. I have the harmonic fib cooking right now. See if we can get to that 37.5. We just tried to reach it on that opening range candle. And as you pointed out, S1 is certainly looming. I'm going to draw a rectangle, area support identified right here. Nice volume coming in, though. We have 377,000 contracts traded already in the E-mini S&P, and we're only 5 minutes into the opening range.
Right, and we're trying to compete with the point of control. You'll look at all the volume that traded up around that 5240 to 5250 area. I'm being kind of generous with that range, but just in these last 5 minutes, we've got an area where we could take over that point of control here down at 5207 or so.
Oh, yeah, no, for sure. And I'm just looking at the vol to vol tool really quickly, guys. Just to kind of here, I'll pull it on the screen. This is the CME Group's website. It's called the vol to vol expected range. It's an options play here and data. And I'm just going to select a product. I'm going to go ahead and select equity index. Then I'll go ahead and select the E-mini S&P, and then the E-minis, then the E-mini S&P, and it's going to give me data for that market. Now, the second thing I want to do is look at strike prices and expirations. So what is today? Today is Friday. So this, let's see, what's the date today, Tom?
The 12th.
The 12th.
April 12th.
All right, 12th. All right, so it's already on the 12th. So I'm going to click on that. And then it's going to give me these interesting areas of interest, which shows us where most of the put volume is and where most of the call volume is. And these are kind of, I don't know if they call them call walls, Tom, or what they are, dealer levels, maybe.
Yeah.
But the biggest put level right now is at 5,200. So it's a key level today. You can go back and see another pretty decent sized spike up here at 5,170 and 5,175. And we've been talking about that 5,175 for a while. I don't want to say these act as predict price or act as magnets, but these are areas of interest.
And areas of interest that, people in the options market are putting their their conviction behind, right? It's showing you how many people think that that's an area that is either a stop, it's a hedge, it's maybe a breaking point where they say, well, if it gets down here, I'm going to buy this put because it's going to continue on, or if it doesn't, it's like a stop, right? I don't think it'll get down here, but if it does, I'm gonna hedge my position. So, it's not just calculations on a chart because of pivot points or previous open, high, low, close. This is actual conviction, people taking positions in the market.
Absolutely. And the cool thing about this tool is you could, there's all sorts of different products. It's not just E-mini S&P. We talk a lot about the E-mini S&P, but you can go energies with this, agriculture, crypto, foreign exchange, interest rates, metals. You could just pick whatever it is. As a matter of fact, I'm going to see if I just copied my link. I passed it over to Mission Control. We'll see if we can get that link also into the chat. And if you guys you can play around with it. It's pretty interesting. Oh, boy. Back here, still buyers are coming in, Tom. We have 400,000 contracts traded, down 32 on the E-mini S&P. Maybe we should check out another stock index feature.
Yeah, let's look at NASDAQ.
Tom Schneider favorite, micro NASDAQ.
It's just not getting that boost that the E-mini S&P did, right? It's still kind of at the levels it was right before the open. Do a retracement, it's certainly not as retraced as the E-mini S&P. And so, this market has been down since, what is that, 5 in the morning, 3 in the morning, somewhere around there, and 4 in the morning, has been below VWAP, and VWAP has kind of been left in the rear view for a while. We've been trading between that first and second standard deviation. So, I don't think it'll stay there. I don't think it'll stay between those two lines. But the question is, where is it going to go? Is it going to keep extending to the downside, or more likely, I think it might find a little bit of a breakout back to VWAP?
Yeah, and so VWAP's going to be key again today, especially when these big trends happen in these markets. And I think we're going to see this theme throughout all the asset classes, which we're going to get to. And I do want to mention, Tom, in addition to Raleigh and Patricia Meyer, we have H. Paulie H is here. I almost said Turtle H. Paulie H is here with us. Turtle, Nick E, Anissa, Bowhunter, Chadro.
Yeah.
Chadro. There we go. Chadro's with us. Apologize for that. Stephen Rio, Mark R, Dan, Theo G, J-Man 2005, live from Las Vegas, Nevada. Boston J. There you go, Tom. Boston J is here representing your college town. Lewis H, Robert W, Dave R, Chris C, R Crawford, Kaz P is with us. Hida is here. Another Kaz is here. Mom and Dad Kags. Good morning, Mother. And Eagle is here as well, in addition to Simu and Avi. Thanks for being here, guys.
It's a great group.
Great group. I mean, It's a Friday. If
Right.
this were me, Tom, and I didn't have to be here, don't tell Mike Burke this, but I'm just saying, it's Friday. Oh.
Well, today of all Fridays, I mean, this is one we probably wouldn't want to miss just because of all the big moves today. And because of the news that's coming out, we want to be on alert a little bit more. We want to be a little more careful with our trading. We'll talk about that in trade setups. But, we have markets are down, and stock index futures are down. We have a little bit of a lift in the metals, a little bit of a lift in energies. Crude is up, gold is up, silver is up over 4%.
Oh, let's go to silver right immediately. I didn't recognize that. So I think we're still in the May contract here. We have about 72,000 contracts, 73,000 contracts traded so far. And that's a pretty big move, Tom, in silver.
Yeah. So that big dominant candle is when basically when the Chinese markets open. And so they, like with gold, they were buying silver as well and pushed this above VWAP, and kind of like we just saw in the NASDAQ in the opposite direction. VWAP isn't really a factor right now. The pivots, you might say they are a factor when this market kind of plateaued after that big bump up. It found a support level right around R1, and R2 acted as support as well a couple times. And now the question to me is for silver, can we get to R3, right? Is it possible? Well, certainly it is. We can't say that this is the top, right? Because that just is trouble. But, how far is it to R3 is what I would want to know. And so there you can see it. We're about halfway there. Not bad.
No, not bad at all. And if I was one of the Reddit apes, to the moon. There's my arrow.
There you go.
I don't know. We'll see. Anything could happen. Again, VWAP, I agree with you. VWAP's going to be key today. We're a lot of price separation here as well. So this is looking like a pretty positive move up on silver, not to $30 yet. I've seen silver at nearly $50 before in my lifetime on the futures market on a non-adjusted chart. So we'll see if we get there again today. Get there again. Right now, this is looking like looking for places to buy. End of story.
Yep.
The other area of resistance, I think you just already pointed this out, but I'm just going to draw my rectangle here, just so I have it for prosperity's sakes on this chart, in case we look at it again later on today, is right here. All morning long, couldn't get over there. Then we took off.
Right, and it kind of coincides with that maybe possible new area of support.
Yeah, and it corresponds with the opening range lows. So,
yeah.
Let's go. While we're at it, Tom, let's go to copper. Copper also caught a bit early this morning. We have this is a classic capital P, as in Paul, shaped volume profile. Long tail at the bottom, or stem, if you will, and then a really nice bell-shaped curve at the top, right? And the value areas at the top. Those are those dark histogram bars, and a really nice point of control is formed around 434.5. And if you just look at that point of control, I mean, I'm going to estimate 75% of the candles have traded through that level.
Yeah, I mean, that's quite an area of, this represents this capital P shape, just kind of means that volume came in during a trend, right? So, and not during the beginning of the trend, an uptrend. So, consistent kind of drum beat up. There wasn't a lot of, really bad retracements. Yeah, maybe you could say in the overnight session there was, but this is pretty consistently up. And now maybe the point of control being where it is, it's kind of found price happiness here. We found a new level, right? We just adjusted our expectations of copper, which is up.
Right. And if you wanted to, right, you could kind of draw a mini volume profile, right click, pick drawing tools, go down to the menu where it says order flow volume profile, click on that. And then after that big rally, I would just kind of draw, click and click, just to kind of see after the paradigm shift in pricing, what's the volume profile look like? And it's looking totally normal, just Gaussian distribution, really perfect right here. So in my mind, for copper to break out of this range, it's going to be hard. And especially with VWAP being where VWAP is, kind of going sideways now.
Yeah. Can you adjust your what is that, RSI or MACD? What do you have down at the bottom?
Oh my goodness, look at that. That's a MACD.
Right, yeah.
Right. I know I keep moving around. I keep changing my oscillators around. Yeah. I'm trying to find that magical oscillator, Tom, that's going to give me the answer. And the truth is none of them really do, but they give you some pieces of information, right?
Yeah, for sure. Now what's interesting about this, Jim, is this MACD showing bearish momentum. Okay, we have a cross of that those two lines right there. And yeah, it did turn around a little bit, but it hasn't followed through. So you think, well, we get a cross down, this should be bearish. And it was bearish for about an hour, maybe an hour and a half. But what that is really saying also is the momentum is changing from positive to negative. Although it's also coming back to the zero line. So this is really an indication of consolidation rather than definite bearish. Over time, that MACD line has gotten smaller and smaller, right? It's gotten closer to zero. So this is, we can have a consolidation area after a bearish indication. Doesn't mean we're just price is gonna turn right around and go straight down. That's not what happens all the time. This is a momentum indication where momentum is changing, stopped the uptrend, but it didn't necessarily translate into a reversal that's stuck.
Okay, so one, the trend, it does look like a trend channel just looking at the candles. But two,
Right.
you wouldn't use the word divergence then here.
It does look a little bit divergent, but it's just not following through. It's just not following through. And I think MACD is a little different just because it's the difference of moving averages. It's not where is the price compared to the range of the high and the low, or comparing up days to down days. It's a different kind of indicator. So divergence in MACD for me, doesn't mean as much if we see it.
Got it. Makes sense. Makes total sense. All right. Well, S&P is trying to claw back a little bit. Let's go check that that particular market out right now. And we could go to any market, any other market you want, Tom. I just wanted to kind of look at this where we're at from a retracement point of view, retracement back up point of view. And yeah, we wick through that 37.5. We almost touched the VWAP, which is surprising me, but couldn't quite close above it.
Yeah, I mean, this is sometimes what we see is a little bit of follow through on that second bar. Now we've got our third bar, and we're still up above the first bar. We're trading around the top, the close of the previous bar, which makes sense. Question is, are we going to attack the VWAP, or are we going to come back down to the one standard deviation band? MACD on this intraday basis is giving us signs that it's about to turn bullish. So that histogram going above zero, which corresponds with the signal line being crossed by the MACD, that's the first it's the first indication in a normal way of using MACD. And I say normal, I should say the most common way, which is that cross above zero corresponding with those crosses. It's kind of where you might take a signal to go long. I'm not saying you should, but if you feel comfortable, maybe that's what you do here. But just look at what happened, 2 hours ago. We crossed above and we crossed right back below. So you can get whipsaw, right?
Yeah. So right here, approximately 740, 750, MACD goes positive, right? This is like Skynet. Skynet's turned on. But then a few candles later, right? A few candles later, 830 to 840, the Terminator shows up, ends that nonsense, and now we're back down. So that's a great observation where, sometimes momentum doesn't continue, right?
Right. And if you had traded it, if we were to deep dive into it and say, okay, we got the signal here, let's evaluate the trade on the close, you would have been washed out right away. I mean, you wouldn't have been positive at all. The market hasn't gone above where you went long. So this is where, stops are essential, right? Especially if you're using technicals to trade as triggers, which some people do.
Yeah, and this was a really nice. So we talked before, Tom, about when to trade, pre-market, or market, opening range, after the opening range. And from a pre-market, this is why I like the pre-market. Here's a pre-market kind of picture, right? Right up to the number. So you can see that it wasn't really trending that much, but there was some clear and present wave action. I'll use the word wave action, and the pivot got stuck right in the middle of that daily pivot. So sometimes these little areas pre-market, you could get a little bit of love in the middle there before any drama happens, and I would use that. And then in those particular cases, sometimes the oscillators and the economic indicators that we use behave in a more traditional format because you don't have these external shocks that are coming.
Right. Right. And we have one coming up, right? We have one at 10 o'clock. We might see some volatility because of the consumer sentiment report that University of Michigan puts out. Here's what I would say if about this possibility of a bullish indication on the MACD. If it does give us an indication, look where we would be trading to. We'd be trading right up to the VWAP, which could act as resistance, right? So another case where, I don't know if I'd take this signal just because there are bearish indications as well as bullish, right? It's not really being supported on the chart with, okay, yeah, you know what? This is an area where we should see some lift. I'm seeing an area where we might see some resistance. So what wins out? I don't know. But the last time this happened, the MACD was kind of heading towards VWAP, didn't get there, turned around right away. So just be careful if you're using indicators for triggers.
So would you say with the sell-off that we have so far, and it's a Friday, and geopolitical news, and maybe another bad inflation data point, if Michigan sentiment comes in negative, there's two scenarios, right? It can come in positive or it can come in negative, beat expectations or not. If it comes in negative, that might be a better signal to get short than if it comes in positive to get long. Does that make sense?
Well, yeah, I think it does, because now you're going with the trend, right? You're going with the trend of the day. The trend of the day is down. You kind of trading around the VWAP all morning, all evening, into the morning, and then at some point it broke down below VWAP, hasn't regained it. So if the Michigan sentiment report indicated something where it missed the number, right? It comes in lower, and the market thinks, wow, that's really not good. We're gonna start to short. I think that's probably the more impactful side of things, because now, let's say it comes in, it beats expectations. You've got these headwinds. You're in a bearish day. You've got this VWAP coming up. It might not get the lift you think it does.
Yeah, so I agree. That's exactly what I was trying to articulate. Although you did a better job. So
I don't know about that.
So for sure. So we'll see what it comes. It's an important number, folks, and it's has moved the markets before. So that's another reason why we're gonna wait to come up with a trade idea until after that 10 o'clock number, at least assimilate it a little bit.
For sure. Hey, can we take a look at the Japanese yen? Is that possible?
Well, we'll see if my dad is cooperating here. We'll try it.
Okay.
Click on that yen. It's going to take a minute to populate. So there we go.
Okay.
And then it'll take a minute to populate at the bottom as well. For some reason, I'm playing around with the data too much, and so I'm getting these weird kind of things on my chart. But here's the 10-minute chart right here.
So Japanese yen kind of currencies are down, and they're down pretty big, with the exception of the Japanese yen. Japanese yen is actually up today.
Yeah, I'm just going to show this on a chart. We do have that bullish engulfing.
Yep. And I like it when it comes at the bottom of a trend.
Okay.
It has a little more impactful meaning, I think.
And we're bouncing off of that 30 on the RSI at the bottom.
Yes. Going
back to an intraday.
So Bank of Japan, I think, they've kind of been in the news, right? Because they're changing a little bit about their policy with respect to interest rates. They went positive, but then they rarely went positive, right? It wasn't that much. It was like 0.1%. And so, it took a little bit of a hit, but I think there was some information. Their finance minister was speaking yesterday. They're considering the handling of ETF holdings, so I think that's a change. They're making some monetary, say there's a monetary policy tweak that could narrow interest rate gaps. Yeah, they're addressing the issue. Basically it's more open Japanese central bank policies than they have had in the past. They're acknowledging that they have to fix these issues of why the yen has been so weak. So I think that's positive.
Yeah, and you almost have to, like, for a lot of reasons, like trade the yen upside down, like do a handstand when you do it. It just seems like it's always going the opposite way of every other currency pair that you see on the board, right? It's a weird thing. Not only that, we're in the futures. It's the yen US dollar is the currency pair, not the US yen, right? So now we're tracking about 152 in the cash market. So when you see the quote looking a little different, don't freak out. That's just the inversion of the actual ratio.
And right, the ratio you might be used to.
Right, the ones that's quoted on the TV and other for over the counter secondhand forex platforms.
Okay, we can't knock them too much.
Yeah, we can. Why not? Advantage goes to futures, Tom. It does.
I'll agree with you on there for sure.
All right. So coming around the corner, Michigan sentiment and the opening range will conclude. We'll look for some trade setups. Let's take a really quick break. We'll get right back to it.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
So Tom, we're back with the micro Nasdaq, and I have a 10-minute chart up here right now, and I just took a daily and put the 10-minute up there just to see what these rotation zones are going to look like and what the RSI is going to look like at the bottom. And I don't know if we have any news yet on. We do. We have.
Yeah,
we
came in weaker. Came in weaker. So 77.9 is what it came in at. It was forecast to be 79. So it's off by just 1 point plus, and previous was 79.4. So the last true reading was 79.4, came in at 77.9. So it ticked down a little bit.
So what does that tell us? I mean, we're still tracking around that 5,200 level here in a 10-minute. And that 8 exponential moving average I'm putting on the 10-minute just to kind of compare between the dailies and the, it's a different view for me. But right now, it seems like 1, 2, 3, the last 4 candles, we traded through that level.
Right.
So yeah.
Yeah. So here's my thinking.
Yeah.
We used to say bad news is good news and good news is bad news, because if there was bad news, well, then the Fed won't do this or the Fed will do that. Right.
Mm-hmm.
We don't have that anymore. Right. The Fed's kind of in a corner. Right. Because they're not going to raise rates and they're not going to cut rates. So I think when we see these numbers now and they are a miss, they're going to be bad news is bad news. The market's going to react that way because the market knows that the Fed can't do anything, right?
Yeah.
Fed's not going to all of a sudden say, oh, you know what, we'll just raise rates. They can't do that. Now they could, obviously they can do anything. They could cut it 50 basis points or raise it 50 basis points, but they're not going to do that. Their messaging has been, we're data dependent. We know now we see 1 to 2 rate cuts by the end of the year. They're not going to let a print like this change their mind. So I think the market's just reacting like, look, the sentiment is weaker, could be pointing to a little bit of a weaker economy.
Yeah, absolutely. I agree with that. So, looking at this chart though, and thinking about those 51.75 numbers, I'm not so sure we don't try to get short sooner than later.
When you say 50.75, are you talking about the retracement numbers?
No, the 51.75 number we saw on the option skew.
On E-mini, right?
Yeah.
I mean, that might be something that we shoot for, right? That might be a breakdown. I shouldn't say breakout, breakdown.
So I'm going to set up a 3-unit strategy, Tom.
Okay.
We're going to set up a custom 3-unit. This is the micro E-mini S&P. We're going to set up a 3-unit custom strategy, right? So we're going to have a multi-target. We're going to add a 3-level, 3-contract multi-target setup here. Now, when you set it up, you could always change your targets a little bit, right? So I'm going to go ahead and put a stop loss in here, Tom, and I'm thinking this is a micro, and I'm just looking at the chart. I want to be above the VWAP here, which is now a different color. I apologize for that. It's the green line. And so I want to be above that, right? So that's going to be at least 624 handles for now. And again, we could change it. 24. So my profit target, I'm going to go ahead and separate it. We'll go 24. We'll go 30. And then we'll go 35. Again, this is random at this point, but I'm going to go ahead and tighten it up a little bit as well. And then on the stop strategy, we could leave it at none, or we could jump our stop to break even after we achieve a certain milestone. And I'm going to choose to do that. So I'm going to go to none. I'm going to customize it really quickly here. And I'm going to say our profit trigger, if we get 16 ticks our way, I want to jump my stop to break even plus a tick. So 16 and 1, do it for all 3. We'll do it for all 3 units. 16 and 1. 1 means I'm going to jump it to break even plus a tick. So maybe we could you get some of our commission back. And then I'm going to hit OK. And now this is set up. I'm going to hit OK.
Now, Jim, just so the viewers know, you could have saved that as a custom and then just applied that name to those as well. I know you're doing it on the fly.
Absolutely right. And let me just kind of adjust my indicator here a little bit so we can see it a little bit better, because this order flow volume profile has those bands around them and it kind of clouds things up. So I'm going to do 2 bands. Well, I'll do 2 bands, right? And then let's see what other stuff we could do to make it look a little bit better. The area between the bands we could change also to make it a little less cluttered. So I'll make this one, we'll just make this first one white, right? And I'll hit apply, and you'll see now the bands are starting to come into play. The color of the VWAP itself, I'm going to make purple. I believe this is how you do that. And there we go. So there's the VWAP band. That green line I mistakenly identified. That's that moving average.
One more thing, Jim, before you hit OK.
Oh, shoot. Yeah, no, it's okay. It's easy to get back. Go ahead.
Can we make that? So you did. Let's make it update on each tick or on each price change.
Oh, good.
Yeah.
That was a rookie mistake on my part. Calculate, not on bar close, on
price change.
Yeah. That was a good one, Tom. That's a good one.
So that'll bring it up to the current bar.
Yeah. Okay. So now in this scenario here, when I place my trade, right, it's going to be a 3-unit trade. When I place my trade, whether it's a limit order, a market order, or stop, it's going to go ahead and apply. Once I get filled, it's going to apply that custom. So, Tom, how aggressive should we be? 25 retracement?
Yeah, I think so. Let's try that.
All right. We threw it in. I threw in a 3 lot, right? Order quantity 3. I have my chart trader open. I don't have to have my chart trader. I can close it right now, but that little lightning bolt under ATM strategy means boom, we have a strategy cooking. So let's see if we can get a fill here. Let's I don't know if I don't want to chase it because I think that's bad practice.
Yeah, I was tempted to do a breakdown trade, but that I think breakouts, breakdowns for me are more at the end of the day when there's not a lot of time left. We have time here.
Okay. Well, we could certainly try it, right? And just to kind of demonstrate that this does look like it's heading that direction. So let's demonstrate that with the breakout trade on the bottom.
Okay.
Where you start making new lows, we want to get short, right? That's the idea.
Yep.
Am I thinking right?
Right. Go short, breakout.
So this is a case where we're entering on a stop loss. It's little, stop losses are supposed to be protective. Well, not always. You could enter on a stop loss.
Yeah. Yeah.
Would you do the breakout at the bottom of the bodies of the candle or where I have it?
I'd probably do it where you have it. I mean, at that point, I'm envisioning, we're on the ES, our daily ATR is spiked, right, to almost 60.
Yeah.
So where does that put us? That puts us close to our target. So yeah, I would think we have more downside. I think the previous target wick, which is just by, I think that's fine.
Let me throw my daily pivot in here. So if you want to add the pivots, I think it's pivot. Let's go down to P. Pivots.
Yeah.
Double click. I'm not going to change anything, Tom, other than, well, I don't have to change anything here, right?
Right. The only thing I like to do is I like to extend them all the way left just to see, right? So you might change, there's a bar count width up top.
Yeah.
I changed that to 120 just because we use,
Learn something new every day.
Hit apply. You'll see it goes all the way across.
Oh, so now S1's here. It's color coded, so I'm okay with that. Could I justify it to the right? Let's see if I could justify it to the right. Pivot?
I don't know. Maybe.
Oh, it says scale justification right.
You can go left. If you want to do it to the left or no?
Well, no, because I have all it's fine. I was like, how do I get the S1 over here?
Over there, the label.
Yeah, that's okay. That's okay. We're okay.
Yeah, I don't know.
All right, we'll leave it. We'll leave it. But I am going to go back to the order flow VWAP for a second. And another thing you could do, I think you could hide the labels, right? So price marker, if I click on that and hit apply, it hides these labels on the right-hand side. And because you might not want to see all those labels, right? And, for me, it's like, we don't want to see them. So you could do it for any of these studies, right? Price marker, take that off. Go to the next one, price marker. Take that off. Hit apply. Kind of makes it a little easier to see this right-hand axis.
Especially when you're trading off the chart and you want to see where your entry was or where your stops are, your targets are.
Yeah, for sure. So we're trying to get down to our target, Tom. Not too enthusiastically, but S1 just seems to be reasonable.
Yeah, it could be that the market digested that news and okay, we've done our job, right? We've moved the market down a little bit. Not a lot of follow through, and buyers might be coming in right here. Looking at the cumulative delta, Jim, and buyers and sellers have been kind of acting accordingly with price, meaning when the price moves up, you get a lot of buyers coming in. Price moves down, you get a lot of sellers. Right now, even though we have this small bodied red candle, there are some buyers pushing that accumulated number up a little bit.
Yeah, I hear you. Let me open this up a little bit. We'll take a look at this. We'll stick here for a couple seconds here. Remember that 5175 number is way down here. I'm going to just draw a horizontal line real quickly there to get there. And there we have it. But again, maybe the bottom's in. I'm going to draw a rectangle. I just don't know. I don't believe it.
Yeah, I kind of have in the back of my mind what you said earlier about risk off. What if something happens this weekend geopolitically? I think people are going to get out of their positions, and if they're more long than short,
Yeah.
they're going to have to sell. Right now, there are more. Well, right now it's almost flat. Right now, it's been a lot of buyers coming in most of the day, but right now it just popped a little bit negative. So I think that's where cumulative delta might help. Is at the end of
Yeah.
the day, is that number wildly positive or wildly negative? If it's wildly positive, people don't want to hold their position over the weekend. Maybe the opposite is coming, to fruition, right? Meaning we got a lot of buyers. Now they have to sell to get out of the position. That might bring in pressure down. We could see a decline at the end of the day. But if it's the opposite, if we've just seen sellers finally come to life and knocking this market down and knocking that imbalance down, they don't want to get stuck just like everybody else. They don't want to get stuck at the end of the weekend. They're going to have to buy, and that might push the market up a little bit. So that's where cumulative delta, I think, might help, today.
Yeah, no, for sure. I know that's you and Credelli fan favorite. Let me kind of adjust. I'm going to adjust my fib a little bit further. Now, you could draw a fib at a different place too, and I'll show you. You could draw more of an inside fib right now. We have let's see if we get a lower low here. But you could draw an inside fib, and with the way I would I'm thinking of it as this little peak here.
Yep.
That's when the buyers became exhausted, and then we broke back down. And I think that's another kind of area, if you're using fibs, to say, all right, that inside fib we would trace perfectly to the 50%, which corresponded to the 37% in the outside fib. So now we got two fibs going for us.
Right.
Anyway, let's just see what happens. Let's hang tight here for a couple of more minutes before we roam about the cabin here. Now, I have this trade on. This is kind of a tip. So I have this trade on in the MES, right? So I'm going to turn off my instrument link because I want to change to a different market and I don't want to lose my instructions. So I'm going to go no instrument link. And then what I'm going to do is I'm just going to right click and I'm going to say duplicate in a new tab. And I duplicated in a new tab, right? So we have two MESs, same chart, but in the second one, I'm going to turn back on the link, right? I'll turn back on the link. And now I could kind of adjust this second chart. Let's see if this goes well, Tom. Let's see if this goes well. I think it's going to. I don't know. The dog just barked. The dog thinks it's going to go well too. Or maybe the dog's warning me. Did you hear that? Did you hear the dog bark?
We did. We did. That's a first, I think.
So I'm going to hit it. Let's keep our fingers crossed. See what happens. All right. So now, now we're in a micro NASDAQ.
Now you're in a micro NASDAQ. Okay. That's great.
Now we're going to go back to the tab at the bottom. And there we go. We still have our custom strategy lightning bolt going on. On the NASI, we have no ATM strategy. So just to recap, I took off the instrument link, maintain the OCO order that we have cooking, duplicated it, put back on the instrument link, and now I could change it to anything I want. And I could even hide the chart trader on this particular chart.
And that won't affect your micro E-mini trade.
Correct. Right.
Otherwise,
if you were to change this chart, it'll give you a warning message saying, hey, by changing this, you're going to lose the instructions for the OCO. Do you really want to do it? And my answer is no. I think this is a valid trade idea still. I want to get filled.
Well, the other thing, Jim, is I think that's important to understand is when you place an order, just a regular order, right? A limit order, stop order, market order goes right to the exchange, right? Limit order, is that held at the exchange as well, or is that held in the software?
The limit orders and stop markets go to the exchange.
Right.
So they're resting at the order book. They're not in the cloud somewhere, but the instructions for the OCO are the logic is on your trading platform. So,
Right.
If you close your trading platform, then the CME is not going to take those instructions. It's not going to be like, oh, Jim wants to do a multi-target bracket once you're filled on the short side. They won't take that.
They
right?
don't know about it. That's the point, right? Because they
Right.
can't take those instructions. So just like I like to tag a target or a stop to a study, right? Like VWAP bands. It's the same for ATM instructions, right? The exchange doesn't know what I'm doing. The exchange doesn't have a look into my software, doesn't have a look into my chart, doesn't know what studies I have up to know
Yeah.
where that study is valued to place that order. That's all done
Yep.
through the software. So very, very key, I think, is to have a chart. If you use OCOs, if you use attachments to a study, you have to dedicate a chart to that order.
Yeah, absolutely.
So powerful.
It is. That's awesome.
Such a powerful tool. But
Oh,
you just have to know.
Tom,
Yeah.
look at gold. Oh my God, it's up $63.
Oh,
Wow.
wow. Just got a little bit of a bid.
A little bit. This is holy cats.
This is where I
10
check my
o'clock.
news. This is where I check my news because yeah, that is quite the candle. And that's not on the 10 o'clock news, right? That's not on the news that came out with Michigan sentiment. That's
Well,
if it had,
this
we would have seen a candle before.
correct.
Right?
Correct. Wow. I mean, that's amazing. 2430. I mean, I could probably do an extension here. I'm not even sure how to do a fib extension for today. Let's try it. I don't. Do you see any good spots to do that, Tom? Because it never really retraced down, right?
Right.
You can go high to low, and then your low is here. Let's try it. See what it looks like. So this probably isn't a classic. Oh wait, I picked the wrong one. My bad. Let's go ahead and pick the fib extension. So, do you go to this point or this high, low to high, and then go to the low here? I'll pull this to the side so we could see the study better. And well, it does have a target. It does have a target, which we hit. Holy cow.
We wick to it. Yeah.
This is spooky.
Well, that's what I think happened here is the White House came out with some non-comments on what about an imminent attack from Iran to on Israel. There was some unconfirmed reports of alerts going off in Israel about hostile aircraft in the area. And then the White House came out about 10 minutes later saying, well, we won't comment on that. But they did say they deemed the threat to be from Iran to be credible, to be real and credible. Yeah.
So here, this is a news-driven behavior right now, right? And it's news-driven in the sense that you don't know what the news is going to be.
Yeah, it's unplanned news, right? It's unplanned news. But we do, we know what's happening over there. We know it's not going to be good news, right? If we hear news from there, it's not like, okay, maybe I could be wrong. Maybe they say, oh, it was just a mistake. Doesn't seem like it's just a mistake, right? So any news coming out of there, you might see these reactions like we see. This pushed it up over R2. Now it's coming back to R2, but yeah, gold is certainly where traders and investors look to go when there's uncertainty like this.
Yeah, for sure. And we just saw that. We didn't get this. Let's see if we got the same reaction in the E-mini S&P. We didn't, right? So that's interesting. We didn't get that same reaction, Tom.
Yeah. And
you would expect, go ahead.
Well, maybe it's because already, we think about the end of the week, uh, positions being closed. Maybe they're just doing it early, right? Maybe they're just saying, look, I don't want to wait till the end of the day to take risks because the news of what's coming out. Maybe positions are being closed as we speak rather than waiting for the end of the day. I
Yeah.
don't know.
No matter how you slice it, it's risk off.
Yeah.
So let's take, all right. So our trade, the breakout thing's not cooperating. I do want to kind of demonstrate the trade idea though. So I'm going to cancel that order. And then I'm just going to go ahead with the original idea. Let's just get short. Just kind of make it. All right. Well, there we go. I was going to tighten it a little bit. So now that OCO just kicked in, right? It automatically placed all of these trades, right? We're short 3 units. We have a stop, predefined stop. We have profit target number 1. We have profit target number 2. And we have profit target number 3, right? So this is a multi-target bracket. Now, you could, and you should sometimes change these targets to more appropriate levels, right? So let's get one maybe is a runner. One could be at the bottom of my rectangle. And so now same thing with the stop. If you don't like where the stop placement is, after you set the parameters in the OCO box, then you could just adjust it. And but when I move them around, Tom, I'll bring this to the 37.5. I just canceled and replaced that order, but the instructions are still valid. We're still in play.
Right. That's what I like is when you move those targets around, you don't lose that OCO behavior, right? Like if you were to take that third one and drop it down or move it up, if it gets hit, of course, it'll cancel that stop. If we, get there, doesn't matter where it is. It doesn't matter that it's strayed from where you originally had it. It keeps that, capability.
Yeah, right. Not only that, even though I move my stop, it's still going to jump it to break even +1 once we hit the original threshold we defined in the actual strategy. So that doesn't affect that either. So
right,
that's a good thing. We got a little bit of room to go here still. Let's see if with this segment we do have Steve and Jonathan coming up next, which is going to be awesome. But we got 4 more minutes here for this trade to cooperate.
I think we'll get one target.
You know? Okay.
I think we'll get one target.
Okay. All right. I'm gonna keep my fingers crossed. That's all you could do.
Yeah.
Oh boy.
You have any plans this weekend, Jim?
No. I was pretty busy in Chicago the last weekend.
Right.
So I'm looking forward to just chilling. How about you?
Good. Yeah, about the same. Take Mrs. Schneider over to the airport. She's going down to Florida for about a week. So
Oh, nice.
yeah.
Good to be Mrs. Schneider. So the stop just jumped, Tom. We just saw that. We achieved our profit trigger. The stop just jumped to break even plus a tick automatically, and we're driving toward that first target. So you're going to be a bachelor for a week.
Well, bachelor dad. So I will be Mr. Mom, if you will.
There you go.
For the week, which isn't too far from how it is anyway, right? Working from home. But it's good. It's good. It'll be fine.
Yeah. Well, I'm sure you're gonna miss her, and I'm sure you most likely won't burn the kitchen down.
Oh no, not at all. In fact, Matthew does have a preferred chef in the house.
Oh, really?
Yeah.
Would that be you?
That would be me.
Oh.
So.
Okay. Well, that's awesome. Well, we have the opposite scenario here.
Okay.
Mrs. Keggs she's really good. I know I'm biased, but she's really, really good.
That's great.
And I'm like, throw some eggs in a pan and throw some mushrooms in there, mix it up.
Well, when you're cooking for one, it really doesn't matter, right? As long as you enjoy what you eat. But when you cook for other people, There's a little bit of pride that goes in there. You don't want them to turn their nose up at what you eat, right? So
Yeah.
that requires some time. That requires, a little bit of experimentation, a little bit of research. It's not too different from trading.
No, it's a skill. It's an art for sure. So my greatest ability is the smash burger. I'm pretty good at that, but that doesn't take much skill either.
See, now I've just embraced that. I've made them for the second time this week, and Matthew loves them.
Yeah.
Matthew loves them. I'm okay with them. I've got to tweak some things here and there, but he's 11 years old. He doesn't have the refined palate that we do.
No, if I'm ever babysitting, I'm going to make him smash burgers every day.
He'll love that. Maybe I'll just send him down to you for next week.
I'd love to have him. All right, so we hit our first profit target, Tom, and the stop has changed to 2, right? It's a 2-lot stop now. It's in balance with the rest of the position. We're still short 2. Market's still breaking down. We'll see if we can get our second unit here. And then what will happen is that stop will turn into a 1-lot automatically. So again, it kind of eliminates a little bit of pilot error. It eliminates the need to kind of manually get involved. You can it maybe gives you some discipline even, like, hey, okay, this is, I'm going to let this go in autopilot.
And if it turns around and you get hit for your, if your stop gets hit, it's the same thing. Your targets are canceled. It's almost like set it and forget it. And, you're protected, so to speak, from your own forgetfulness, which I experience all the time.
Yeah. Anyway. All right. So we're getting up against it, Tom. We have very special guest coming up next. Stephen Jonathan's going to be with us. We're going to be talking about all sorts of great stuff here. So appreciate you being here with me, Tom. I know you're going to come back later on today, right? Who do you have on this afternoon?
Yeah. So 11 o'clock, I will be back. We'll be talking technical analysis explained. We're going to do multiple moving averages, kind of the nuances of that. And then I think you and I will do the wrap up.
Awesome. All right. I'll see you soon. Let's go ahead and take a really quick break and get Stephen going.
Great.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
All right, we are back with Let's Talk Futures. Stephen Jonathan is joining us. He's working with Mission Control right now on a couple of tech issues. They will get to it. In the meantime, let's keep talking. I mean, we had a lot of stuff going on here, and in the unplanned news cycle, unfortunately. And I just did, for those of you who were with us at the previous session, we did have this 3-unit micro E-mini S&P trade that we automated using the ATM automated trade management technology with the Ninjatrader software. And we're short 2 more units, right? Our first unit, we were short 3 contracts, units, the same thing. We achieved our first profit target, which, remember, past performance not indicative of future results, and we don't always achieve profit targets. But now it looks like we're going to get to the second one, right? We're approaching the lows of the day. And then once that happens, my stop is going to change from a 2-lot stop to a 1-lot stop. Now that's automated. I didn't touch anything. That just automatically happened. You can see my stop is just a little bit below our entry. My third target is way down here, and it's positioned next to the S1 pivot, right? That was Tom Schneider's favorite. He loves those pivots. And so right now, again, it looks like a simple bracket because we've taken off 2 units already, right? We've taken off 2 units already, and we're on our way. So I don't have to do anything. I could just leave this alone. Or if I want to manually trail my stop, the OCO instructions are still going to be pretty valid here. I'll bring it down to that 12.5% retracement you see on the right-hand side. And I just tightened up my stop now. So 2 units successful. And no matter what, the third unit is going to be successful, but we're hoping to get that drive all the way back down to that 5190 number. And remember, we talked about the E-minis having some important put call dealer levels at around 5175. So I think that could be achievable also. Again, that's my opinion. I don't know. What do I know? But we do our best to try to know something. Anyway, that's where we're at. That's where we're at right now. Again, Stephen Jonathan should be here in a minute. So let's be patient there as all these markets are selling off. There's a lot of gloom and doom hitting the news wire right now. I have my financial juice up, and I could read you some of it. You probably are aware of it. An American official told Al Jazeera, "We're moving additional military capabilities to the region to enhance regional deterrence and measures to protect our forces." So again, it's risk off, folks. Okay. It looks like Stephen is with us.
Hello.
Stephen Jonathan. Stephen, you made it. Good morning.
How are you?
Oh, well, not so good. It seems like the whole world is doomy and gloomy today.
Well, a couple of interesting things going on. I mean, the CPI numbers were, the highest annualized inflation in 6 months. So that's a little worrisome. And in another couple of weeks, we'll be feeling the effects of the summer formula for gas, which adds a little bit of a kicker to inflation anyway, no matter what. So that's going on. The currency market.
Wait, Stephen. Let's talk about that a little bit, right? So we have a summer blend that everybody has to convert to, right?
The summer
because
blend
of driving
involves because of the weather, they reformulate gasoline, and it has the impact of raising prices. So from like end of April, early May into like Labor Day, there's a different formulation. And not to get super technical, but I can tell you that the most important 2 prices that one needs to pay attention to are the fact that copper is $9,500 a ton and cocoa is $10,000 a ton. To me, that's a world crisis.
Certainly the cocoa side is.
Absolutely. And just after Easter too. Anyway, so some strange things going on in the cocoa chocolate market. But the thing that's interesting across a lot of other markets on the fixed income side is as the Fed clearly has the wherewithal to sit back because US GDP is okay, job numbers are okay, right? So they can be very circumspect on the inflation side. And the markets clearly reflect that, where the futures market prognostications about Fed funds have basically as much chance of a rate cut in June as there is of a snowball lasting in June, right? So I mean, this is not happening. And the first time there's really over 50% chance of a rate cut is now September. And the chances of having two of them by the end of the year have almost gone away as well.
So Stephen, let me ask you this, though. Let me ask you this. Yeah. So between now and June, we have two more CPIs, two more PPIs, two more PCEs. Could we revert back to the original trend, and could that go our way?
You know, it could, because I think there's still enough people actually that are still kind of holding their breath that all this relatively good news on the economy, on jobs, all of a sudden is going to go poof. But they've been holding their breath for a long time, right? So the point is the Fed can continue just to sit back, and they are not going to cut too soon. In Europe, apparently, where they kept rates unchanged this week, apparently there's talk that there's a dissenting group within the ECB board that wants to cut rates. Now, you know, in the U.S., with a very, very quick real-time the market's ability to in real time understand what different Fed FOMC voters think by tracking their speeches and, you know, the real time spectrometers that people put out, like Bloomberg. It doesn't seem like there's any dissenting group right now, any super doves out there. They're all pretty much circumspect, but I suppose the proof in the pudding is in the eating. And if we got a month or two of soft job numbers, would all of a sudden the same readings of those various voters at the FOMC start to show by virtue of speeches and commentary that they're now turning into a bit more doves? So it's possible. And certainly,
but the ECB, though, the ECB has, their members have, you know, their different sovereign, you know, different cultures, different sovereign countries.
Exactly. Correct.
Whereas here you could argue, well, we got Jim in the South, we got Stephen in the North.
But we also have 100 years of institutionalized independence. Right, the Fed is over 100 years old now, and so, you know, that and the independence of the Fed is like 60, 80 years old from the early 50s. So, I think it's quite clear. Now, one thing that might happen that would send a signal is what the Fed does with its balance sheet reduction, because there's a lot of talk about what the right levels of balance sheet reserve assets are. Because don't forget, the balance sheet represents Fed assets, but there's also liabilities at the Fed, which is represented by what banks hold at the Fed. And if banks get nervous about their ability to manage liquidity and stresses, they'll start to reflect that to the Fed. If you recall, in 2019, we had a big kerfuffle with spikes in rates and funding, and the Fed doesn't want to have that happen again. So what is the right level for Fed balance sheet numbers? Because I think some people make the mistake of assuming that when they're unwinding this, it's going to go to zero. Well, that ain't going to happen. It's not even get close to zero. But the dilemma is where above zero is the right number, and people measuring it on a percentage of assets. And Goldman Sachs thinks that they need to have about a 12% number as a percentage of assets, and right now we're about 15. You know, that means that it could still go down a little bit, but they've been doing it for a year or two. And so before you get any kind of vote in whatever meeting that's going to be, you could very well see first the Fed make an announcement at the May meeting that they're going to start to dial back how fast they reduce the balance sheet. And so that's going to have an impact on markets as a leading indicator that they're getting more and more comfortable that they've kind of calibrated and toggled right in terms of what the levels of liquidity are out there, and they may be getting close to kind of like sitting back on their laurels, even as the headline Fed funds rate doesn't move. And the way
so that would be at the start of like a dovish disposition, basically.
No, it would definitely be starting to turn the super tanker that is the Fed's kind of policy view. And as you know, super tankers take a long time to turn. So that would be a first indicator. Right now, there's some pretty interesting indicators out there in terms of spread. The pretty interesting indicators in terms of spread between U.S. rates and Euro rates, and U.S. rates and UK rates. I mean, there's 200 basis points spread over Euro rates, 60 basis points spread over UK rates, and the way we are right now with those kind of spreads and markets moving and buying different countries' assets based on those spreads. I mean, you could be testing, the 105, 110 range or lower in the euro, and you could be going to like the 120s, low 120s in the pound. Dollar yen is already telling you that there's stress, right? Because it's over 150. Japanese prime minister was in the U.S. this week addressing a joint session of Congress. So there was no way they were going to intervene while he was in the U.S., but they may have made a small tactical error in not intervening last week over Easter week when everybody but them was out. So there's some concern there about what the Japanese are doing, and there's also concern about what the Chinese are doing. The Chinese yuan, they're defending a level because they realize if they let it go much below where it is, it has the negative connotations to capital markets, and you could see capital outflows, and they're deathly afraid of capital outflows. And as much as they call themselves a market-driven exchange rate regime now with a wide 2% band, apparently this week there were some trades on the electronic platform that were inherently outside the band. The numbers in the deals were outside the band, and those trades were blocked. They were not allowed to settle. So some things are going on behind the scenes on the FX side. But I also point out.
But Jonathan, I mean, Stephen, doesn't it seem like the monetary policy at the Bank of Japan is extraordinarily slow moving? It's a slow train. It's not a fast train.
Well, and yes, and they are definitely happy in this crazy world that they now have positive inflation, right? So they've ended zero interest rate policy is over now, right? The last G10 economy to end it. So definitely they're going to be very slow moving, but they are just nervous that getting above 150 and settling 150 as a bottom rather than a top would potentially send negative signals to the market. So they intervened in October of 22 in a decent size. But right now, one of the reasons they're not doing it, other than they didn't want to do it while their PM was in the U.S., is it's clearly a dollar thing. It's not a yen thing, right? Look, I just went over the spreads in Europe between U.S. rates and European rates. So it's not just a yen thing, it's a dollar thing. And how do you intervene as one country when it's a kind of a macro development? And the answer is you don't, because it's kind of money down the drain, right? So having kind of been involved with Fed intervention back in the 90s when they were much more active, it's clearly a very, very touch and feely game. It's a kind of a financial version of Archimedes' lever. With the right size lever, you can move the world. Well, with the right size lever, you can flip the FX market, but you got to be very careful when you use that lever.
So it also seems, though, it seems like too, there seems to be more of a move afoot for the U.S. government and the Japanese government to do deals together. I mean, the steel thing kind of is maybe not going to happen. We have high speed rail maybe that the Japanese are going to bring here to the U.S. It seems like there's more collaboration there.
Definitely, but in that context, that Nippon Steel is an I was just talking to my wife this morning about it. It's interesting it's an election year here, right? This is U.S. Steel is the target, not ABC Corp, right? So This is going to be an interesting dilemma for the president. That he could be, this could become, the moment he says yes, the next second there could be a political ad pop up on TV, by the other side, right? On the union side. So I don't know where that's going to go. I mean, I'm not an expert in that industry. I used to follow it more closely, but clearly it's 6 months before votes. So it's not like it's just in the middle of a term, right? When it would be forgotten about, you know what I mean? So I would hold that thought, irrespective of what you said is correct. The U.S. is definitely looking to prop Japan up as the leader in the Asian world for them. So they can focus on other things, i.e. things happening in Central Europe, what have you. So there is a bit of a diplomatic dance that has to go on there, and Nippon Steel is kind of one of them. So it's unclear how he's going to come down on that one. So I would say, go ahead.
Yeah. So let's extend this conversation to Taiwan, chips, Arizona.
Okay, so again, I think it's in the U.S. interest to continue to foster domestic production of these things. I mean, irrespective of whatever Janet Yellen was trying to do when she went to China last week, to continue to try to foster some sort of modicum of economic cooperation with these working groups that have been set up, which are replications of working groups that existed in the mid-teens. That I actually was on one of those regarding the currency markets, and this time around it's much more of an echo. People are much more cautious. They're much more nervous. The best that you'll get people to say is, well, if I'm not decoupling my supply chain from China, I'm de-risking it. So they're still going to use the DE, but they'll change the suffix. You know what I mean? They're not going to go away from doing something, but they'll try and make it a bit more palatable, but it's not going away.
Yeah. Well, interesting. We'll see. I mean, there's billions of dollars of subsidies and grants and low interest loans and tax incentives to get this facility going in Arizona. And I thought that was a pretty significant.
It's industrial policy, which is not something that the U.S. typically trades in, right? Industrial policy, that's a European thing and or definitely a Chinese thing. But when a Chinese EU car manufacturer revealed that they were going to sell their lowest model car for $9,500, I mean, what could you get if you wanted to spend $9,500 on a U.S. car? Would it have an engine?
I agree, but Stephen, and by the way, I was in Chicago last week. I took an Uber from O'Hare to the suburbs. I was picked up in a Tesla Y Long. The fella drove it on autopilot all the way to my destination. It was a miracle, and it was an awesome car.
Yeah, but the problem is it's $50,000-$75,000, and the Chinese know that the target market, just like anything, it's like what's the E version, Jim, of the Model T? The Chinese are making it. The Chinese are making the E version of the Model T, and we're not, right? And so there's a disconnect between trying to promote sales of these, trying to promote rentals of these, and the markets, because it's a the system we're running here, will push back when they don't think it's in their interest. Look what Hertz did with its rental car vehicles on the E vehicle side, or what Detroit's doing with production. So we can talk about it all we want, but markets react to supply and demand, right? And there's it's kind of a version. Another version of that is, what do you pay for an iPhone? What do smart devices get sold for across India and Bangladesh? Trust me, it's not what an iPhone costs.
Yeah, iPhones are pricey. I've got one, but again, it's kind of like the Tesla Y. It works great. It's seamless. There's great apps in there. It does miracles. It really is. I mean, it's a great thing.
There's a digital divide in this country, people think that people kind of assume that everyone in the U.S. has the same access to the internet, and that's not the case. And I think that people are going to find out that digital divide is alive and well. And the more that we get into more smart technology and virtual reality technology, that people are going to find out that divide is still out there. And so I think that what China has figured out is the lowest common denominator has a market, and the U.S. has got to figure out how do they, what are they going to do? Just put in quotas or tariffs to block those things coming in? Or are they going to figure out is Detroit and or Cupertino in California going to figure out collectively how to make some of this tech more affordable? Time will tell, but the Chinese certainly had. Now, you can argue that they're doing that because they have subsidies behind the screen, and the answer is probably yes. However, they're trying to disguise it, and that's what Yellen was trying to go over when she was there. Don't sell your state-sponsored export surplus to us and expect us to just accept it.
But alternatively, do you think a deal could be struck? It's like, all right, you guys could sell Teslas here in China as long as we could sell our Yugo version of the EV in the U.S.
I'm reasonably jaundiced about the Chinese agreeing to anything that allows foreign competition. I mean, consider that they have to produce a California level of jobs, California population level of jobs every year. If they don't do that, the old-fashioned Chinese mandate from heaven, which has been the mythical what governs Chinese leaders' ability to lead since time immemorial could disappear. And they're definitely afraid of that, right? And so they need to keep people employed. And so however they have to do that, if that has involved exporting their production surpluses to anywhere in the world that will take it. And now people around the world are pushing back.
Yeah. And there's probably a big market for the lower cost anything.
And again, the other thing is, away from Nippon versus US Steel, when it comes to China, there's not too many issues on Capitol Hill that are bipartisan, and China is one. China is one, and again, it's 6 months before the election. So, the anecdote I can leave you with on the Chinese side is for all of the come to us, we're opening our arms, we're going to reduce some of the restrictions we've been putting in place the last couple of years that govern using data and and foreign companies operating in China, et cetera, et cetera. Check out the Economist article where they highlight and give a synopsis of a training video that a data manager at a Chinese company is in a mythical training video, and in the video he's asked by foreign consultants to give them some data they need to analyze his company for purposes of investment. So the video stops and a bubble pops up over the guy's head, and in the bubble he's thinking, should I do this? The video transports you 10 years from now, Ebenezer Scrooge Christmas Future style, to this person in jail for having given the data. Then it comes back to the present. The guy wakes up from the bubble. He not only does not give the data to the company, he reports them to the government. That was last week.
Oh my God, that's crazy. So but
for all of this come into China, this is the other side of it. That video, the way they reported it, was like the old Spy versus Spy cartoon from like 1965 with Boris and Natasha.
So, Stephen, is Chinese buying gold right now? Is that part of this rally we're seeing?
I don't know that it's necessarily China. I mean, I think that it could be people worried about inflation and how long the Fed's going to hang in fighting inflation. I mean, and gold is typically a risk off asset, if you will. The Chinese have been big buyers for their reserves, but it's hard to tell, right?
Yeah, it's hard to tell, and there's a lot of discussion about, well, the central banks are buying gold now because some of the countries that are being cut off from SWIFT and having some troubles with the U.S. dollar, don't want to use the U.S. dollar, are using gold to do transactions as kind of their base transaction level. And which might explain why. I mean, we're at 2440 right now as we speak, which this rally is more than just normal.
Yeah, it's an interesting scenario that you put out there. Clearly the dollar's been has been a financial weapon, and it's been even more weaponized since spring of 2022 with what happened in Ukraine. So there are countries that feel it's not their fight and they want out from under the thumb of the financial asset task force and the Treasury. And so I suppose one of the ways to do that is gold. But, the thing about that is, not to oversimplify it, but that's, remember the videos you've seen, speaking of videos of country A paying country B, and they go to the basement of the New York Fed and they show people putting an ingot on a trolley and moving it from country A's locker to country B's locker. And is that the way the world's going to finance trade in 2024?
But it could be a depository receipt, right? You change the owner's name on the receipt. It stays in the same vault.
Yeah, well,
Yeah. Anyway, I don't know. I don't know. All I know is my decades of being a commodity broker. I'm an old guy. This rally in gold is unique. It stands above anything else I've seen ever.
Yeah. It's hard to figure. And I actually don't have an answer for you on the gold side. I mean, I've been kind of looking at some of the commodities, but not on precious. So, if it was a year or two ago when inflation was close to double figures and people were questioning the Fed's stomach for the fight, I would have had an answer. But people don't seem to be questioning that, and yet we're still up at those levels you just cited. So that's a bit of a conundrum.
And Bitcoin is still holding at 70,000 after the halving. Hasn't really budged since then. Not doing the same thing. treasuries.
There's
Go ahead.
there's
Go ahead.
stable coins. There's starting to be a bit more talk now about digitizing, run of the mill mundane transactions. There's a story on they came out last week about treasuries being tokenized and $1 billion in treasury volume now being done digitally. There's stories out since we last spoke about corporates in Europe issuing bonds on the blockchain, so they don't have to go to a bank and pay an arm and a leg of fees to have the bank be the book runner. So there's things that are happening on the blockchain digitization side that people have long predicted that, right? And the skeptics have always said, well, this is just a solution looking for a problem. But I'm sort of in the middle of it. I do understand where I think sometimes these things might be a solution, and the more that you've democratized the use of blockchain type transaction technology, the more the actual coins, which are the tip of the iceberg part above the water, the more there's a demand for them, because people equate the news flow I just cited with ultimate demand for the current those coins. I think you can separate that, right? The actual use of it as a practical payments technology from the reason you'd be buying the coin itself. But there are many who don't. They just conflate the two.
Right. Well, that's an argument too, that there's going to be institutional resistance to that happening because of the fees you just mentioned.
Well, institutional resistance to the more the technology gets cheaper, and the more that the Ethereum technology within the last couple of months, they released something that's going to massively reduce the cost of using Ether as a platform for some of these technologies that will make the payments process much more efficient and much cheaper. And there's places that are seeing existential threats to it. Places like Depository Trust Corporation, which has built a link to the blockchain because they've been told if they don't, that people are going to stop putting their assets with them and they're going to put them on the blockchain. So there's definitely more and more use, and I still feel like there are more places to use it. I've always said, when it comes to using these technologies, and we just talked about a couple of them on the fixed income side, the slower the transaction moves and the more document heavy the transaction is, the more there's a place for blockchain to be disruptive in how that deal takes place. And what's the deal that the most complex deal that most Americans will ever do? Buy a house. How many documents, when you sit in your dining room with the attorney and he hands you the closing documents, if they dropped on your foot, you'd have to go to the doctor, right? So there's a rationale for making that simpler, more transparent, and quicker. Why do you have to pay a title attorney to find out where the line in your property is before he can sign the deed? Why isn't that on the blockchain? Think that's an example, right? So those kinds of things, I think, are valid uses of this technology. Where I'm a little bit skeptical is people that see those happening and they go running to buy the coin or buy futures because they just assume it must mean that Bitcoin is going to go up. And I feel like it's two separate conversations.
I like your logic. I do. I'm not, the retail community is not going to, buy a car with a Bitcoin because the target moves too much. It's,
how do you do that? How do you do that? But using blockchain, again, the second most complex transaction most Americans will ever do is buy a car. And again, you're sitting in that dealer, sitting in the sales manager's office because you're signing the lemon law and the odometer and all this stuff. Why isn't that not on a blockchain? Why am I doing that on pieces of paper?
Yeah, that's a good point.
So those things to me make sense to be quote unquote digitized, but to equate those things happening from I'm going to buy Bitcoins to go to 100,000, I don't see that link.
Yeah. Well, we'll see what happens. Anything's possible. I don't know, but one of the things that we're running up against time, but I do want to ask you a little bit about crude oil right now in the light of potential trouble in the Middle East.
Yeah, there's the macro side, which is constant missiles flying back and forth, which, in the wrong place could, crimp 100,000s of barrels of, reaching the market. There's a lot of interesting debate between the IEA and OPEC Plus about should they be cutting production more? Where's the demand? It's a bit like the argument about the Fed. When will the Fed move and when will we know it? And how long do we hold our breath relative to them keeping rates high? I think OPEC is kind of in the same boat. Like, where's demand going over the summer when summer demand goes away And do we have to start making more production cuts now because of what might happen in the fall? And how long do we hold our breath? It's kind of a similar kind of conundrum.
Yeah, no, I hear you. So we are up against time though, Stephen. We covered a lot of ground today. I really appreciate you being here with us, especially on a Friday. Easy to take Friday off. Anybody wants to reach out to Stephen Jonathan, send me an email at learn, Learn, at ninjatrader.com. I'll get you guys together. Stephen, thanks again for being here. I appreciate you.
No problem. Like, only thing I would say is watch that Fed balance sheet. That's going to be the only indicator out of them for the next month.
Got it. Coming up next, the incomparable Tom Schneider, CMT. Hang on.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Well, we're back to Ninjatrader Live. Good morning. I'll be your host for this segment, Technical Analysis Explained. Tom Schneider, CMT with Ninjatrader. And I hope you got to see the previous segment with Jim Cagnina and Stephen Jonathan. Always a lot of information coming from Stephen. Great person to work with. I've worked with him for many years, previous employment. Great guy as well. So if you didn't get to see it, you can always look at the replay on the Learn page or in YouTube. So today's topic, we've done this topic before. We're taking a slightly different tack on it. We've had the topic of moving average as a study, and moving averages are interesting because, well, first of all, when you look at a chart, more often than not, you will see a moving average on that chart if you're looking at somebody who's analyzing the markets. You turn on the TV, business type TV like Bloomberg or CNBC, and you'll see charts with moving averages. And certainly we know there are some preferred periods of moving averages, but you can know with the software we have today, you can make them your own. So it's a great thing. Today we're going to take a little bit more of a exploration in not just one moving average, but multiple moving averages, and some of the differences that they may, or some of the different reasons they might be used. But before we do that, I do want to review what a moving average is and why we use that. So maybe Mission Control, if we could go to the charts, great. Here's a plain old, and I say plain old, this is about as vanilla as it gets. E-mini S&P, one of the most traded contracts in the CME. Not the most traded, but one of the most traded in terms of volume is the E-mini S&P, represents pretty much the overall market, and on a daily chart. I've got these bars up. I don't have candlesticks up, although you could put moving averages on a candlestick chart, and we do. It just, with the colors, it might be a little more distracting. So there are different types of moving averages. We're going to use a simple moving average for the purposes of this part of the segment. The simple moving average is about the most basic moving average you can have. And if we double click on this, I'm going to change this from the default of 14 to 50. And just, you can see right there, when I went from a shorter time frame to a longer time frame, we had an adjustment of the way the moving average works. But what we're doing is when we're calculating a moving average, we start with, let's say, the current bar, okay? So the current bar has 4 values, open, high, low, close. We'll focus on the closes, and it also has a moving average value. And I can bring up my mouse and I can click on the mouse button. I don't left click, I click on the mouse wheel and it'll bring up my data window, my heads up display, some people call this. And you'll notice it has open, high, low, close volumes, values, as well as volume, has the date. It has, in this case, it has, what is that? Is that the week, the 15th week? Yeah, maybe we're in the 15th week of the year. So really interesting there. But at the bottom, it says SMA. Now that S is for simple moving average, SMA, simple moving average, and it has a value as well. And so how do we determine what those values are? The simple moving average. Well, we're taking a 50 period moving average. We're taking a calculation of the last 50 bars close values. So let me see if I can bring up the annotations, because that is where I can maybe draw something here and you can see what it is. We'll see if I can do that. Just bear with me one moment. Things move around, and so sometimes things are not where I find them, but I'll try to point them out here. Let's see. No, we'll just use this. Let's see if we can do this. Wrong way. Here we go. We'll try this. So each close, you can see each close right here. 1, 2, 3. You know, if we did this 50 times, we'd have 50 closes, but they're the 50 most recent closes. And if we added those all up and took an average divided by 50, we would get this value. And I can know that because that's how it's calculated, right? That's the current value. Why is it moving? Well, every bar, there's a new calculation. So yesterday's calculation did not know about this close, of course, but it also included one more close that wasn't calculated today. It's the 50th bar from this bar. It isn't used in today's calculation, but it's used in this calculation. So as the chart moves along, we drop the farthest data point from the current bar and include the current bar. So that's a moving average. The values calculated are always moving. And so what that does is that smooths out the trend. So that takes away these little nuances where even in an uptrend, we have a pullback. Even in a downtrend, we might have a little bit of a rally. This smooths that out. We don't see those very smaller, minute details. 50 period moving average. What does that mean to us? Well, you know, it gives us trend ideas. It gives us an idea of where the trend is heading. And you can see, let me get rid of this annotation. That's from before. We have ups and downs, and within those ups and downs, we have smaller ups and downs. That wave-like behavior is kind of smoothed out by the moving average. The moving average really doesn't pay attention to these moves up, these moves down. They're calculated. They're part of the calculation. But if you calculate 50 different values, it's really going to kind of smooth it out. As opposed to the 14, which is the default, or maybe 200 will smooth it out even more. And it could be a very different value, of course, because we have different values calculating the study. Now, what else can we use moving averages for? In addition to just seeing where the trend is, a lot of times we use those as guidance for where the market might find support and resistance. So recently, this is a great example. I didn't even know it until I changed it to the 50. The E-mini is finding support at the 50-day moving average. And if we drill down a little bit, I'm going to zoom in. You can see what happened Wednesday. We traded and we do the comparison. We were just about 5 handles off of the moving average. We were just above it. And if we go to yesterday, we traded below it. The low was at 173.50 and the moving average is 177. So about 4 handles the other side. And here we traded below, but now we're just above. So this moving average acting as support. And the question is, will this market turn around and that support be found, or will it close through the moving average? That would be kind of the second step in the weakening of the support level. First step is trading through it. Second step is closing through it. And then maybe having an entire candle below it would be maybe the third strike against it as support. And maybe we're seeing a change in trend in whether the moving average acts as support or resistance. It goes from support to resistance. That could be maybe confirming a turnaround. So support, in addition to trend, what is the trend? Are we above the trend? Are we below the trend? That's another thing we look for. But support and resistance certainly is key to why we use moving averages. I mentioned above and below. It's just a quick check, right? If the market is trading above a moving average, it's considered bullish, right? Now, it doesn't always mean that, right? We could trade above and then quickly come below. We could trade above and quickly come below. So we want to see these things where, yeah, we close above, we tick above, we close above, we trade above, and even then that might not be enough and it turns around. So, but you'll notice that, the moving average doesn't change as quickly as the trend. So, sometimes it's good to look at the moving average to see, well, okay, we're below it, but maybe we can get back up to it. And again, that's where the support and resistance comes into play, right? When that happens, we want to see, is it acting as support or resistance here? Does it become support? Is it acting as support here? It becomes resistant here, or hold as support? We'll see. Now, multiple moving averages. Why would we use multiple moving averages? Well, when we look at the number of calculations that we use to calculate a moving average, the number of bars, the number of data points, we can use them for different purposes, right? We can have a shorter term, like a 20-period moving average. And very simply, I would just add another indicator, and we'll just grab that SMA and we'll add it again. Now here's where I want to change a couple things. One is, let's say 20, we'll make it a 20. And we'll say, you know what, I want to see each price change. Now, what's the difference between tick and price change? You could have multiple ticks at the same level, multiple trades at the same price, right? Each tick is each trade essentially. On price change, I only really need to know on price change for a moving average, because volume doesn't really matter to moving averages. I don't care if it's 1 contract or 100 contracts trading at this price. It doesn't affect the moving average value. But if the price does tick up or down, then I want to know about that, because my moving average value will change. So I want to say on price change. What that does for you is it doesn't tax your PC processor as much. Now, this is probably going back, showing my age, when it mattered. But if you have these high volume markets and it gets into a news moving market moving event, then yeah, maybe there is some delay avoidance you have by putting it on a price change versus tick. But that really is kind of a thing of the past. But we still don't want to tax our processor if we can help it. We want to avoid that. Now, I generally change the color as well. The smaller I go, and this is something I learned from Jim, it's kind of easier to think about, the redder I will go. So I'll put red, something very close, and I'll make it a little bit thicker so we can see it. You can make it a dash line, a dash dot. You can change all sorts of things. But this is my 20 period, and I could double check just by double click here right up the top. And this is something that if I'm looking for a shorter time period on my trading or investing, then I would want to have a shorter time period. But what also does it tell us? It can tell us a couple things. One is it's kind of like multiple layers of alarms, right? if I'm following the 20 period moving average and I'm expecting support and resistance, well, it's going to get tested more than the 50, odds are, because it just has that closer to the price feel about it. You'll notice that this 50 is a little smoother. This 20 is a little curvier, right? It does respond to price changes a little quicker than the longer term. What that means is we might see more intersections with price. We might see more tests of support or resistance, support, resistance. Here's support that held. Here's support that kind of held. It failed a little bit, came back up, failed a little bit. But you could say that the 20 does a better job of acting as support and resistance, maybe because it's tested more, right? But when it fails, then I want to know, well, if it fails the 20, what's going to happen with the 50? So on the shorter term, this catches a change in maybe trend a little bit better. Look, if we're up above the 20, we're bullish, right? If we're above a moving average, we're bullish. That's probably going to fail. If we see a turnaround, it's probably going to fail the 20 before it hits the 50 because they are trending laggy instruments. So why do I have multiple moving average on them? Isn't there one perfect moving average? Well, nothing's perfect. Nothing's perfect for everything you're trying to do as a trader. You might want to know about the longer term trend. You might want to know about a shorter term trend within that longer term trend. You could go super long and see some great support or resistance levels, but they might not matter as much because, well, they don't happen as often. And we could see that, right? We can add another, let's add the 200, right? We hear about different moving average levels on TV. It seems like 50 and 200 seem to be the case that the financial news like to use. And certainly I saw that in the institutions use that quite a bit. So we're going to use this on price change. I'm going to get rid of this. Well, we can keep the label up there. That's fine. I'm going to change the color just so we have a little bit of a distinction. And I want to make it something you all can see. So I'm going to make it green. We'll make it dashed as well. We'll make it a little bigger so we can see it. And we can even make it a little bigger. There we go. So here we have the 200. Notice it's really, really flat. And I don't mean flat horizontal, but it's kind of this constant increase, right? The market we know has been up. It's been up since what? Beginning of 2023 or maybe end of 2022. I think that was it. October was the low, right? And this moving average was in a downtrend of pretty much most of 2022. So it was sloping down. And it took quite a bit for this slope to change to the positive well after the October lows because it's using 200 days worth of calculation. That's 200 days of trading days, not calendar days. So we're talking about 10 months worth of data before it changes. So long-term trend, we didn't even find support when it came down in October. That just shows you, you look at this, wow, that's okay. That's a little bit of a pullback. It's a pretty big pullback when that 200-day doesn't support it that much. And you can see there's a lot of distance between the 50 and the 200 versus the 20 and the 50. And that makes sense because these are closer. So, you might see, I don't know, 50 and 200. You might see 20 and 50, 20 and 50 and 100, all these different values. You also might see Fibonacci values as moving average numbers. Might see 21. 21 is a great number. Not only is it a Fibonacci number, but that's generally, I think, 10 or 9 or 10 months out of the year. That's how many trading days there are in that month. So it's truly like a 1-month number for most of the months. 21, 34, 55. These are all Fibonacci numbers, and I've seen them on charts as well. So what are we doing? What are we doing with this? In addition to support and resistance, can it help us identify potential reversal points? Of course it can. Of course it can. Now, are they going to be points? Are they going to be peaks and valleys? When I say reversal points, I mean for your thinking, not necessarily for the market. Moving averages are laggy by nature, so they're not going to anticipate a trend change. They might confirm a trend change, which can be a good thing if you're trading. I'm going to modify this again. I'm going to go to my indicators. I'm going to remove that 200. I'm not going to remove it. I'll just make it invisible, and we'll hit apply and hit OK. And so what are we looking for? Well, when we talk about moving averages crossing, when they intersect, what is that telling us? That's telling us that possibly there is a trend change that has happened and we should pay attention. So let's look at this. I'm going to use my Ninjatrader annotations, and you'll forgive the colors because it's generally red indicates a bearish thing, but this is actually a bullish cross. When the shorter moving average, what I mean by shorter is the one that uses the least amount or the lesser amount of calculations, in this case, a 20 period, crosses a longer period, we pay attention to the direction of the cross, because that smaller moving average period is closer to price. It's going to change. It's going to react to price changes faster than the longer one. So in this case, a 20 period moving average crosses above a 50. That's considered a bullish indication. Now, on the chart, it's very deceptive, because on the chart, the values at which they cross are most likely going to be away from the price. When I look at this, we're not evaluating this as if we had bought down here or sold down here. No, we have to look at where the price is. But what it's saying is, okay, we've been in an uptrend for almost a month, but this is confirming that, yeah, maybe this trend is going to continue. This trend is real. This is a reversal. Now, you have other ways of doing that, right? I see 3 peak highs that got lower, and then we took out that first peak high. And that happened before we got this cross. That might be an indication. We also use moving averages for the crossing purposes, where the price crosses the moving averages. Those can be those can be indications as well, but they can also be whipsaws. Sometimes we see price cross around a moving average. And so this gives me a little more faith that this trend is a good bullish trend. If I look at that, let me see if I can point it out where we would have maybe taken the signal. Now, you don't have to trade this, but some people wait for confirmation, right? And it's that idea we talked about with Larry Williams a couple of weeks ago, is buying it at a new high, right? Buying a breakout of an existing high of sorts, because it's on strength. So the idea here is not too dissimilar. We're not using previous highs as our guides, but we're saying, look, we're already in an uptrend. We missed the peak, but that's not the point of this. We want to know when this uptrend is in play. This uptrend, is it legit? Well, the trend is up on the 20. The trend on the 50 is starting to turn up. We've got this cross. Maybe this bull trend is legitimate. Now, there was follow through. We know this. With some hindsight. But if we anticipate crosses, then we should be maybe a little concerned that this 20 is starting to turn down, and this 50 might be slowing up, but it's still upward sloping. Well, if we have those conditions kind of heading on those tracks, we might get a turn down here. And this is after that peak. So that moving average turning down, while this moving average is kind of staying the course, or maybe not turning down as fast, that you might start to anticipate a little bit of weakness in this market. And I'm using a daily on the E-mini S&P. The same concepts stand for any other market and any other time frame. So if I look at a 1-minute chart on corn, or if I look at a weekly chart on crude oil, the concepts are the same. Now, the periods might be different. You might find more relevant periods based on the market and based on the time frame. But the concepts are still the same. The shorter moving average will follow price closer than the longer moving average, and so we should pay attention when it changes position, changes which one is on top. Is the 20 dominant or is the 50 dominant? Is the 50 dominant over the 100 or not? When that shorter one is above the longer one, then we're said to be bullish, and vice versa. So important to look at. But just remember, just because we cross here when this happens, we have to look at price up here and say, that might have been an interesting trade. Well, look what happened. We crossed above and we went sideways for so long. I can understand if you're a swing trader holding that for multiple days. That's not in your DNA. That's not a swing trader, right? That's more of a longer term position trader. But that moving average eventually caught up with price because it went sideways so long, and then the market got a boost. So didn't mean that this was a reversal. What it meant was, yeah, this trend is in play, but it took a little bit before it got its next win. Let's take a look at, let me see what this tab is for. So no, that's tab we don't need to use. There is a gentleman, David, and I forget David's last name. Maybe it's Guppy. There's something called Guppy Trading, and he really took it to, made it his own. And I'm not going to even attempt to replicate what he does, but I will try to explain. We do have a tool called, let me bring this up. You can find it here, go to indicators, and this is called moving average ribbon. So this is a really interesting concept. And when you bring it up, it has these colors. You could certainly change the colors and bear with me one moment. So I'm going to change the value to calculate on price change, same concept. But this ribbon is really different moving averages. It's just a bunch of different moving averages. And they're different in the sense that they are different periods. So they could be exponential. If I change it to simple, it looks much different. Now, an exponential moving average, we'll come back to that. Exponential puts more weight on the most recent data. So it's more adaptive, especially when you look at like a 50 or 200 days ago. I don't even know what was happening. I'd have to go back and say, oh yeah, the Fed was raising or cutting or holding, or this was the price of oil, which might have affected this market. Lots changed since those 200 days. So an exponential puts more weight on the recent data because, well, the news is fresher, right? We're reacting maybe to new situations. So exponential is sometimes the preferred way for some people. Now, what this moving average ribbon does, it says, okay, let's take a base period. The base period in this case is a 10-period moving average. And then each successive ribbon is going to be, we're going to add 10 data points to that. So the second ribbon will be 20-period moving average. The third will be a 30, fourth will be a 40, etc. You can change this. You can make this a 5-period. And when we apply that, you'll notice the ribbon gets tighter. The moving averages get closer. Might be a little too much. But I think one of the basic tenets here is when these moving averages, and again, I'll get rid of that, when these moving averages are examined, we look at them for support and resistance. So for example, the 10-period right here in red, tried to change up the color a little bit so we could see it. The red moving average here is the closest moving average of price. It's a 10-period moving average. So when we're in a trend, it should act as support. Now, if it doesn't, if the market doesn't follow along with that moving average, and it breaks down, in this case, where is the 20? It should go to the 20. And if the 20 breaks, where does it go? It goes to the 30. So the question is, where are my levels if these markets break? And do they hold? If they don't hold, then I go to the next level. When it does hold, then I would expect a reversion back to those closer moving averages. Because, if we think about it, these moving averages, when there's a big break away, it's because there's a change in the data set, whether it's a big move on the current data or a big move that falls off, there's a change. So These moving averages will have different widths. The widths between them will be different just because of the number of calculations. And you can see sometimes the 10 is on the bottom, sometimes the 10 is on the top, and eventually they all switch over. So multiple moving averages, this really to me is, think of it like a net, right? Or you see in the movies where, or the cartoons, right? Somebody's being held up by something, or they're in a hammock, and then you see one by one the strings break. Eventually everything falls. It's kind of the same thing here. We plunge down below the 10, we're going to find support at the 20. Oh, wait, didn't find support. We went to the, oh no, not the 30, the 40. Here comes the 50, right? And as these things finally weaken, maybe that's like, okay, if we get through all of these, that's a really dire signal. Just like on the upside, right? As we go through the 10 to the 20 to the 30, all the way through, we finally have a breakout. So I'm run up against time. I could probably talk a little bit more about moving averages for quite a while, but I think it's a good start to think about how multiple moving averages can help you with your trading. And again, everything we did here on a daily, we can do on our intraday charts, we can do on any market. We're going to take a quick break, and I'll come back with Jim Cagnino for the midday wrap up.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
We are back, folks. Good afternoon. Happy Friday, everybody. Joining me, as usual, side by side, Tom Schneider with the midday wrap up. Tom, great job on technical analysis a couple minutes ago.
Well, thank you. I appreciate that. It's one of those things where you think, half hour, how am I going to fill it with something as basic as moving averages? And then you look up and the clock is at 0, right? And you could keep going. So, that's what I love. And it's just kind of like with you and I know Steven, right? You had so many things I know you wanted to talk to Steven about, and you guys could have kept going for another hour.
That guy, he's like in the same category as Sterling.
Yeah.
Right. Sterling Smith. It's such a deep understanding of what's going on.
Yeah.
That I could talk to either of those guys. And you introduced him really to me. I knew Sterling before, but you kind of reintroduced him to me, and then you introduced Stephen Jonathan to me. And those guys are just a golden nugget for us.
Well, I had the pleasure of working with both of them, and we would travel, right? We would travel to different cities and see clients, and that was where it was really fun, because you get together, you have a breakfast in the hotel, or you have lunch out somewhere, or even dinner, right? And that's where you really get to have those conversations. And it might not be about the markets. It might be about, Stephen mentioned his Kansas City Royals, and I worked with them, and so we'd have interesting conversations, and Sterling and Stephen, but Sterling especially is a travel bug, right? And so get to hear about his stuff. So yeah, great guys.
Anyway, yeah, super cool, super cool. So I don't, other than our so on our micro E-mini S&P trade this morning, 2 out of the 3 units were achieved, right? And we trailed the stop down and all that stuff. So that was kind of fun. We'll do more of those like multi-target ATM trades. They're a lot of fun.
Yeah, and it's interesting. You were targeting 51.75 and we got close, right? We got,
Yeah.
that was your third target. But look where we're coming back to. I mean, I just look at where the point of control is right at 5,200 for today. Right on that number, and we're trading right back to it. So the question is, so do we get there? Well, we've gotten there on this bar. I don't think the point of control really is a support or resistance level. It's more of a pivot. We trade around it. So I'm thinking, we might see some resistance more at this VWAP because it's held as resistance all session since about 440, but it was barely support, before that. So I think that's an important level today. I think the market is just tentative on news today.
Yeah, I agree. I think that VWAP is going to be formidable. It's going to be hard to trade above that VWAP going forward for the rest of the day. It's Friday. It's a risk off day. There's warships moving around. There's we have earnings coming out. Who knows what that's going to be like? We have inflation ticking up, maybe. So there's a lot of negative drag here, man.
And look at this, my cumulative delta, I'll blow it up just a little bit.
Yeah.
And channeling your inner Anthony Drager. It's a lot of buyers. And we've got 4 hours to go, roughly, right? 4.5 hours to go, 5.5 hours in the futures market. So unless people are getting out of their positions early, because I can't tell whether they're opening or closing positions here.
Yeah.
But if this is just normal trading, and we think that there's more of a reason to stay out of a position this weekend, this could be a big turnaround into the close.
Yeah. Well, yeah. Hang on, I lost my window here for a second. Bear with me.
Yep. But it's supporting your bearish opinion if that's the case. Now, I don't know. These buyers could be getting out of the positions from earlier, right? These, there were people shorting the market up here, or maybe they were going long and they had to turn around and get out of their position. That could be what drove it down a little bit, but a lot of buyers here, a lot of buyers.
Yeah, and not only today, right? We have a situation where people might need to liquidate positions, but also all week long. Remember, there's a lot of traders that will swing trade, right? They'll hold positions for several days, and the question is, do you want to keep holding that position even though you have a certain bias going into a weekend where you have no control for risk management?
Right. So let's take a look at the NASDAQ, see what's happening in NASDAQ. Kind of the same story, right? A little bit of a rally after the 11 o'clock time period. But, am I seeing here's what's interesting. NASDAQ, there still are more shorts than longs. We're still in negative territory. There's not a lot of offsetting of these really down candles on cumulative delta with this recent uptrend. So maybe it's a little weaker.
Yeah, I would do that 3 units stop again. I mean, I have a harmonic up on my chart. Was 25% is about at 272, give or take a few ticks. Again, that's just me. I do feel like this little retracement back up is kind of. I don't think there's a lot of commitment here. It just seems half baked.
Yeah, exactly. And the volume is I think kind of normal with the midday volume. We had a spike here at that I think this was more of the news event than Michigan sentiment, but more volume coming in after the opening range was completed. So yeah, it's just an unusual day.
Yeah, do you think you see S1 being holding?
It looks like it now, but the trend is down, right? I mean, VWAP could be formidable as well, and we're not even close to testing it. We're underneath that point of control, which is right about 18,300. Interesting that these psychological numbers, look at that, 18, it's really small, but it's point of control is at 18,300. These psychological levels are where people are trading. I don't think we're gonna attack that too much or attack VWAP. Yeah, so maybe S1 doesn't hold, and we've got yesterday's low to contend with, which is, another 115 handles below this area at S1. So
I get the sense, and this is just my feeling, and you can't trade on feelings, but I get the sense that facts don't care about your feelings, as Ben Shapiro would say.
right.
That today, at the end of the day, there's going to be some drama, and I think that drama is going to be to the downside.
Yeah. I don't see market moving news coming out, right? I don't know if we're prepped for that. Let's take a look. Go ahead.
What will be interesting though, Tom, is next week we have a lot more earnings coming out next week, right?
Right. Yeah. Today was the tip of the spear. Next week we have more than just financials too. We have airlines. We have what is it? I forget what the other one is. So we have Netflix coming out, the start of the tech. What's interesting about the tech, the FANG stocks is what they were used to be called, the Magnificent Seven, whatever they're called now. They're kind of spread out over earnings season. It's not like financials where we have 6 banks today and we have 4 on Monday and 3 on Tuesday. It's spread out. Sometimes you'll see a couple of the companies report on the same day. But what's interesting is Taiwan Semiconductors reports next week, and we know they got a big, they were promised big money in Arizona for the chip plant out there, or build one, right? So it'll be interesting to see that one. That they're reporting next week. So earnings season kind of starts pretty dramatically next week.
To the moon.
To the moon.
I don't know. Yeah. Wouldn't it be cool though to have a FANGs reporting day, or a Magnificent Seven reporting day? That would be awesome.
Right. We call it Fangsgiving. How about that?
We got to trademark that, Tom.
There you go. It's probably already done. Let's take a look at the Russell.
All right.
So I do it a little differently. I don't tie my I don't link my market analyzer to my charts because of the reason I like those these orders attached to my studies. It's such a great feature. And so I don't link them, so I have to go to the tabs. But sometimes, for a while I did link them. And so sometimes my inclination, muscle memory being what it is to click on the symbol, nothing happens. So that reminds me. Here we go with the Russell, kind of the same thing as the other two stock index futures. Not a pretty number on the point of control, 2032.8. So we can throw that theory of psychological numbers out the window, but looking similar, right? Weakness, nowhere near VWAP.
Well, not only that, look at the swing highs. The swing highs are all lower. You started out with the high swing high, and then 1, 2, 3, 4 lower swing highs, much lower, the recent swing high. And again, that's just cycling down, spinning downward.
And we're barely retraced. We didn't even get back up to the 25% harmonic retracement.
Yeah.
So, showing signs of weakness. You asked me about the NASDAQ and S1. I'll say the same about the Russell. I think I'll say it with a little more conviction on the Russell. I think we're going to test it. I think we're going to break, and we have yesterday's low to contend with. This will be, if we look at this, if we look at the high of the day is 2062, and I look at my average true range, it's 40.55. So let's call it 40. Let's call it, what is that? 22.22 or 2022 would be the target. That's just above yesterday's low. So perfectly fine if we get down there.
Yeah. Which means we're going to have to smash that S1.
Smash it like your burgers. I love it.
I mentioned that to my, during the break. I mentioned, my wife was like, "What should we do for dinner?" And I was like, "Well, I don't know. We had a rich dinner last night because we went out to dinner. We had a rich dinner.
Very nice.
I was like, so we got to taper a little bit. I go, how about a smash burger? She goes,
But
that's
she's-
not tapering. That's the opposite.
Well, what's different about the smash burger is how you cook it, right? It's not like you can't just throw it on a grill.
No.
And
No.
and there's a little more oil involved, and so it's
Yeah.
a little, yeah, like you say, it's richer. But
Yeah.
yeah,
Yeah.
good,
I have
good. Well,
I have a bacon press that I use. It's that iron, that round iron thing with the wooden handle. You just press it down. That's what I
yeah,
use.
that's good. That's
Yeah.
good. Pickles too. You got to throw pickles on the bottom of the bun. That's what I do.
Well, I'm a fan of mushrooms too.
Okay, there you go. Yeah, Swiss
So
cheese.
I used to hate mushrooms for like most of my adult life. And then my wife
Oh.
sends me a survey about how people who eat a lot of mushrooms live forever. And I started eating mushrooms. And then I decided I don't want to live forever. But,
So far so good, right?
but I like the mushrooms, so I kept going.
Oh, they're good. They're good. Let's take a look at the Dow. Ooh, it's underwater. Now Dow's rallying a little bit here
Yeah.
at the midday. 38,494 is 493 is the point of control. Is that what it is? Yeah, 493. We're just south of there, but we're below yesterday's low. I mean, this is kind of the story of the Dow this year. It's just not performing like other markets.
Yeah, I agree. I'm looking at my harmonics, and interestingly enough, my 37.5 retracement on the upside corresponds to the point of control around 38,500. That happens so often, it doesn't even surprise me anymore. And then it's right by S1. So there's a possible area of interest up there, but we'd have to really be encroaching on VWAP to get there.
Yeah, and that might be something to explore, right? You say, okay, let's go to VWAP, and let's say on the Dow, because Dow has been the most negative, for the most part. Today, not so much. Today, it's actually the least negative, but it's extended more. It's extended past yesterday's low. So, you might say, if it gets back to ZWAP, let's do this. We'll put in a short order there, and we can attach it to VWAP. We can say attach to indicator properties, and all this stuff I have in my chart, we're just going to go right to VWAP. And then where are we wrong? We'll just put it one standard deviation
Order submitted.
above that. Make it easy.
There you go.
And we're just doing this on a simulated account. It's not real money. We're just exploring ideas. This is, but we're not getting crazy, right? We're not loading up on 10 units to smash our position, not our position, our account tracker, right? We're just, okay, it's 1 unit, right? And we'll see if we can retrace back up there, but continue the downward trend overall.
I like it. I do like it. That's been a strategy we've been exploring for a couple of months now. And but today it's going to be with an extraordinary sell-off now. We're going to put the strategy to the test.
Yeah, now let's take a look at gold. I know you had mentioned it with Stephen. We were talking about it earlier. I had a position from what was this? This was last night. I was looking at it. I saw the news, so I had to log in and sell it, buy it, whatever, just playing around.
So it's funny. I do the same thing. I know, it's like I can't help myself.
Right. Right. A little bit of FOMO there, but here, even now we're still seeing follow through. Although we did find a top, it looks like back below VWAP. That's very interesting. So maybe the news was, maybe some of the things coming out when the White House was asked earlier, and maybe more information has come out that maybe this threat isn't as credible, or maybe we're reacting to it in a way that the market thinks is favorable. Regardless, we're still above 2,400.
Yeah, still this bull rally still goes on and on. So I'm not done yet with the bull rally here, but yeah, it's not. This is a very news driven. If you go back time to approximately 4 a.m, 340 area, you could draw a rectangle all the way across. Nice double top area support that lasted pretty much until the opening range, and then after the opening range closed, we continued on, but we continued on with this because of what we thought was surprising news that reversed itself right away. So my interesting takeaway on this chart is we're below that old area of support, which I have starting around 24.17, 24.18.
So you're talking about this one right here, or which one are you? 24.18.
So go back to like 3 in the morning, 4 in the morning, right? Yeah. See those? There's a couple of double tops kind of there.
Yeah, right here. I put it right up here, 410.
Yeah.
So we're below that. R1 looked like it was support for a little bit. Now it's breaking down below it.
Yeah.
The way this trades, especially overnight, you've got Asia coming in, you've got Europe coming in, then you've got US coming in. You will find that there are different levels that are at play every session, right? Yesterday's high kind of acted as, yesterday's close, yesterday's high, a trading area, and then market moved big right up to R1, came back down to VWAP a little bit, which held as support. You might use this rectangle as well. And then when it said, okay, see you later, VWAP, we got above R1 and eventually got above R2, but that we had to wait for the US market to come in.
Yeah. And if that rectangle at 24.18, that if you left it in and you fast forwarded to 11:20 to 11:30, you're setting yourself up for a famous Tom Schneider breakout trade to the downside.
Right. You can see this, this turnaround, pure dark cloud cover. Let's call it dark cloud cover. It's not a piercing line. It's going down, right? Follow through. Wow. We're going to get close to that resistance area. It could be support, maybe not. So the question is, does it act as support? And you would maybe go long there, or if it fails, which is basically right where VWAP was, if it fails both those supportive levels, will it continue? Now the question is how far it will continue, because we know that it did continue. Can it continue back down to where is it? The value area bottom, which coincides with the support area, I don't know. I don't know if I would have taken that trade though, Jim. I was so bullish on gold.
Well, that's a good point. It was a counter trend trade, right? We're bullish intraday, up to that point, bullish interday up to that point. It would have been a counter trend trade, right? For sure. Those are harder to, at least I'm not very good at them. I'll put it that way. So, but every once in a while, you get a big bear move in a bull market.
And if that was your line in the sand, right? VWAP, this resistance area that turns into support, and it's counter trade, you shouldn't expect a lot out of the trade, right? You're not looking for a runner. You're not looking for a target way down to the high of yesterday or the close. It could be, you know what? I don't think this will last very long, but I think if it does break, and what is that level? I don't know, but I probably wouldn't have taken that trade.
Yeah.
Where else do you want to go, Jim?
Well, could you just pop up a silver chart really quickly to see if it had the same behavior?
Yeah, for sure. I'd say yes. Yeah, it had that big move up overnight, late night. Resistance at R1. Didn't really stay at R2 too much, but R2 did act as support multiple times. I think I left my charts on overnight and I didn't refresh them. So there's a little bit of data missing, a couple hours there, but because I leave my screensaver on, but I leave it for like 5 hours, right? So my screensaver doesn't go on until after 5 hours. And when your screensaver goes on, it kind of goes in sleep mode. You don't get the data.
Yeah.
But we see this big rally into R3. It hit R3 and silver's up. It was up much more than gold. It was up almost 5% earlier.
Yeah.
This would have been around 5+%, maybe even 6%. And maybe some good news, calming news brought this market back.
If you draw a rectangle, if you go back to 710 to 720 and you drew a rectangle of support, it'd be right below R2 also, and dragged it across, now we're encroaching in that area of support, which could be the new area of resistance.
Right. Yeah, I'm going to tighten up the rectangle a little bit better. But yeah, we're hitting that support level, becomes resistance, shy of the VWAP, shy of the opening range low. This I would say is a little more bearish looking than gold. Only because the market does want to get back to its opening range a lot of times.
Yeah.
But you're right. This could hold as resistance, turn right around.
Yeah, this is a tough one to trade because this isn't a case where we're going to retrace, we're going to test VWAP and continue to rally. The opposite happened, right? That trade idea would have failed, right? We would have been stopped out, right? We wouldn't have put a stop below below the second standard deviation band. So this is a case where that didn't happen, and now you're not seeing a ton of momentum on the upside either.
Yeah, yeah. And I don't have my usual cumulative delta up here. I should probably add that. I can do that. See if we do that here. I don't know why that's not working. There we go. Oh, it's very simple. If you have the order flow version of the software, you can just go down to order flow and you can find cumulative delta, and that'll put a panel down at the bottom. I'll just leave it as is, I think. Yeah. Now, what's great about this is it calculates on each tick, because that's the whole purpose of the study, right? It's finding imbalances with each trade. So we default to the each tick. But buyers have still outperformed or they've come in stronger even with this big pullback. So we might see further downside later.
Yeah. All right. We'll see how it goes. Do we do Tom, we're going to do a look ahead today or no? Do we not do that on a Friday?
I don't know if we have the graphics for that.
Okay. That's fair. I could do a look ahead we have some great guests next week.
Oh, we sure do. Yeah, let's do that.
Yeah, we have Craig Buick on Monday and Alex Cole on Monday. We have Dan Gramza on Tuesday and Brent Kachuba options expiration week on Tuesday. We have Wednesday Jimmy Ioria and Dr. Efrit from EG Indicators, and maybe Jaime Sandoval will join her as well.
Right.
On Wednesday. Thursday, Anthony Crudelli, Develop Your Edge, one of my favorites, and Julie Wade.
Yes.
The fabulous Julie Wade on Thursday. And then Friday, Tim Reset is going to join us. I've known Tim for 15 years, and this is the first time I think it's going to be me having him on Let's Talk Futures, if I got that right.
Right. You'll be with Tim. I'll be in Boston.
There we go. Boston is the theme of the day.
Yeah. I can't wait.
Oh, okay. I know.
Boston.
You're gonna have fun. It'll be.
I'm
awesome,
gonna see my son, so it'll be good.
Yeah. All right. Well, great day today. Great week today, Tom.
Yeah. It was fun week. Hope everybody had a good week. And there's no bars closing today. If you do have questions for us, you don't want to participate in the chat, you don't want to drop them in the chat, you can certainly send them to us by email. The email address to send them to is learn@ninjatrader.com. Jim, Mike, myself, Mission Control, we can all see that stuff, that email that comes in. Just make sure it's not urgent. We won't, if you're having an issue, don't send it there. Go through the proper channels, but we will get back to you.
Absolutely. Tom, pleasure has been mine today. Appreciate you.
Yeah, my pleasure to be here, Jim. Thanks for having me on.
And I got to tell everybody in the audience, especially going into a weekend, please be safe out there. Be good to each other. We'll see you soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.